And it's been challenging, but also at the same time rewarding because people have been very good to us, especially over Mother's Day. For jewelers, Mother's Day is really the second Christmas.
You pivoted to all online. Has that made up for the loss of revenue that you see in store?
It has not, but I remain positive. We will continue to put our resources into online because we're just so nervous about the reopening, and we just don't want to put all our eggs back into reopening and then have to turn around and shut again.
How long before you have some clarity with the reduced revenue? How long can you sustain the current business model?
We've really cut expenses. We think we can sustain this for a long time like this if we continue to invest in internet and invest in social media. It's not going to be easy because we've had to cut expenses, but we think we can carry this model through.
Yeah. Megan, thanks a lot. Megan Flynn, owner of M. Flynn Jewelry in Boston. And we're going to continue to bring you stories of small businesses struggling through the COVID-19 pandemic every day at this time right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Small Business Report. Karen.
All right, John, thank you. We continue to watch shares at Target. They're down about 1% over concerns over its weakening profitability after gross margins missed analyst estimates in the first quarter, and Lowe's up 7% after it reported earnings. Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz is straight ahead. For Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Influential conversations from Bloomberg Television.
This is a message from the government. There is new guidance to help businesses and employees who cannot work from home be COVID-19 secure at work. The advice will help you conduct a risk assessment, put social distancing measures in place, improve hygiene and cleaning in the workplace, and look after the well-being of your employees. Every workplace is different. Use the guidance to make your business COVID-19 secure. Access the support you need at gov.uk/working safely. Stay alert. Control the virus. Save lives.
At the Halifax, we're all working together to be there for you.
Your money is safe in your account. However, people are using the coronavirus outbreak as an opportunity to try out new scams.
Rest assured that we will never call, text or email you asking you to move money to another account.
Neither will we ask you to share your login details.
For more information and for tips on how you can protect yourself against fraudsters, visit halifax.co.uk/security.
So however you need us, at the Halifax, we're here to help.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
All given the data.
Which segments of Alphabet's business are most likely to come under scrutiny?
Get all the pieces.
They're getting mixed signals from governments.
He's failed to gain traction.
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
A lot of us are still in a bit of a guessing game, trying to determine how severe the downturn will be. The only thing that can bring an end to the crisis is containing the disease.
Finance.
We are the one country where people depend on employment for health insurance in the middle of a health crisis.
Investment.
Real yield is a scarce asset these days. It's just unknowable, of course, where things are going.
Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz on Bloomberg Radio.
From New York City, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance. Coming up on the program, the White House hoping reopening is the stimulus. The Chinese Communist Party taking on Secretary Mike Pompeo, and Moderna falling from a record as euphoria quickly fades. From the Bloomberg Interactive Brokers Studio, hello Wednesday. Here is your Wednesday morning price action. Equity futures higher by 32 on the S&P 500, up a little more than 1%, down 1% in yesterday's session, up 1% this morning. In the bond market, treasuries relatively unchanged. A little more supply coming a little bit later. We'll talk about that in a moment. Your 10-year yield, 0.69%. And in foreign exchange, once again this morning, we see a weaker dollar against all of G10. Euro-dollar advancing by around about 1/3 of 1%. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramage. You are listening to Bloomberg Surveillance, and we have to start by ripping up the script, Tom Keene style. Lisa Abramage, Mike Corbett of Citi just saying, take Friday off. You've all been working so hard, take Friday off. And imagine when this came out, that every other bank on Wall Street went, oh no, we've got to do the same thing soon.
Absolutely.
We've got to give everyone a day off.
Absolutely. I mean, this sort of goes to a conflict that I've been hearing from friends as well as people in the industry. People working harder than ever. And it's much more challenging and exhausting. This is anecdotal, but people saying it's so much harder to work from home and remotely without the setups that they have at work. And yet they're facing pay cuts or the idea of job cuts or just sort of this very bleak outlook. How do you shore up morale at a time like this, John?
You give them Friday off, Tom. In the words of Mike Corbett, I hope you enjoy the day off. You definitely deserve it. This isn't me basically saying that we should get the day off as
really?
well. Not at all. Why would I do such a thing? I've just merely pointed out that Mike Corbett of Citi is giving all of his employees Friday off ahead of the long weekend. Tom, do you think that's what others should follow up with as well? Just give everybody Friday off?
Well, they're like lemmings off a cliff. Yeah, you got to believe their lawyers, their HR, their PR people are going to say, this is a great idea. Why didn't we think of it first? But it's just something we're all getting used to. And I go, John, to what I'm learning about kids, which is the teachers are saying their attention spans have diminished. Why are we any different?
Not a surprise at all. Brilliant lineup this morning, guys. Looking forward to catching up with Joyce Chang of JP Morgan a little bit later. Matthew Harrison from Morgan Stanley, the head of biotech research. That's going to be an interesting conversation with Moderna very much dominating the headlines over the last several days. But I'm pleased to say we can start this morning with Shahab Jalanous, Credit Suisse head of FX and macro trading strategy. Shahab, in the words of Senate Majority Leader Mitch McConnell, there is only one way out of this dilemma. America has to grow again, to open up again, and I'm pleased that is beginning to happen. Do you think there is a side of Washington that sees reopening as the stimulus?
Yes, I think so. It's obviously the easiest way to get economic activity going again, by definition, and that's the easiest way to remove the need for further stimulus down the line by the state, whether it's through the fiscal side or the monetary side. So absolutely, I'm convinced that that's the plan at the moment, especially ahead of the November elections.
You know, I look, Shab, at all that's going on and the overall market thrust, nation to nation. I saw a headline out of Thailand today, folks. It indicates it as well. Is disinflation and deflation. Just set the template right now for how foreign exchange will adapt to this massive and new original disinflationary thrust.
Well, the way it's adapting at the moment is to try to make sense of the different policies that are coming through from different countries and understand which of these countries is most likely to beat the disinflation risk and therefore ultimately potentially have to spend less money in terms of central bank money creation at least, and then look to buy those currencies. I think that's the answer at the moment. So, for example, if you take the Australian dollar, Australia was one of the early countries to get ahead of the virus, and in that context, we're also seeing already a sign that bond purchases by the central bank are falling there. And that's not the case in many other countries. So that has given the Australian dollar a lift, despite some trade tensions with China. So that's, I think, the way the market will try to pass this going forward.
Shahab, a lot of people talking about disinflation, to Tom's point, and you've got the central banks in the UK and the US pushing back heavily against negative rates, and yet Britain sold bonds today for the first time with a negative yield, below zero. These were bonds, about $4.6 billion of them maturing next year. What does that tell you in terms of the market forcing central bankers' hands, saying disinflation is the real problem here? get with the program?
Yes, I think that's correct. It's difficult for the central bankers, for example, in the UK, to openly and explicitly endorse negative rates at this point, simply because that's probably a tool they need to use down the line. They don't want to use all their bullets in one go. And if you look at the UK's case, you have baseline budget deficit forecasts that are pushing close to 20% of GDP for this fiscal year, and not much hope of a dramatically better year next year among the market, even though the central bank's forecasts are more optimistic. What does that mean? It means that there's going to be large budget deficits, and it means there could be an ongoing reliance on the central bank to be essentially printing money to
well, Shahab, let's talk about that. What is the objective of QE this time around? Because this feels different.
I think the objective of QE this time around is really to allow governments to finance very large budget deficits at rates that are acceptable and that won't be questioned by the market in terms of sustainability of that policy. If you have the UK, for example, issuing debt at negative rates, the market can believe that the government will be able to run very large budget deficits, maybe for years. Now, the price that will be paid by the UK probably will be a much weaker exchange rate over a longer period of time, especially if it becomes the only country doing that. But I think that's the game that we're playing right now.
Shahab, I want to dovetail these market observations, the litmus paper of foreign exchange and interest rate, with what John was talking about earlier about Senator McConnell of Kentucky, who we all agree is a good man, and he's got his politics and all that, his belief in the judges, and et cetera, et cetera. Great. The fact is the politicians are going to face the reality of the markets you face every day. How would you presume the politicians will react to these currency dynamics, and particularly how will they react to deflation and disinflation?
It's obviously not something they want to see because this deflation and disinflation, the thing that stems from, in all likelihood, will be very high unemployment. And that's what politicians notice more than anything, because that's what's most likely to make them lose their jobs in the medium term. So I think that's the issue for them above all, and that's why they're so keen to get the economy going again. Now, in terms of what that means for interest rates, clearly they will have a strong preference for interest rates being as low as possible. And you can see that in President Trump's regular comments on the issue, for example, where he's now even pushing for negative rates. What very low or negative rates do is they buy the fiscal authority a lot of time to maintain very expansive fiscal policy without an active market challenge. As I said, the market challenge could come on the exchange rate side, but in the case of the US dollar, that might even be a welcome thing as well for policymakers, particularly on the political side. So I don't believe that these policies are about to change anytime soon.
So, John, I said that these bonds mature next year or in 1 year, but it's actually 2023. And for some reason, I thought that we already were in 2022.
Well, I can tell you, Lisa, even if they did mature next year, they'd still be negative.
They still would be negative.
So it doesn't really make much of a difference.
No, but I will say this idea that the time is fast forwarding and we're on this prolonged schedule was really hammered home to me, to the idea of the 500 billion euro plan that the EU is putting together. Yes, they may pass finally fiscal stimulus, but the money won't be released until next year at the earliest, if 27 member states get together, cats in a bag, and agree on something. So it sort of raises a question, how much more can the ECB do in the meantime, John?
Shahab, talk to us about it. How much more can they do, and how much of a fiscal transfer can we actually expect at the European level?
Look, I think the size of the program that's being talked about, 500 billion euros, that amounts to about 4% of EU GDP. That's not a large number in the current context. What's important, even if these disbursements don't come through quickly, or even if there's a wrangle about them, the important principle here is that Germany has agreed to this idea. Till now, from the market's perspective, the biggest block to some future arrangement with mutualized fiscal programs on a larger scale has been the idea that Germany would never favor this idea. So now that Germany is on board, we can look at the fact that maybe the Austrians aren't happy or the Dutch aren't happy, but people believe ultimately that they would have to fall into line with Germany on this. So I think all that really matters right now is that Germany has signaled approval for this form of a policy. The details are less relevant at this point, in my view.
There's always a country somewhere unhappy in Europe. That seems to be the European way. Shahab, fantastic to catch up with you. Shahab Jalanous, Credit Suisse head of FX and macro trading strategy. With your news, your headlines this morning worldwide from New York. Here's Michael Barr.
John, Lisa, Tom, thank you very much. All 50 states will be partially reopened by Memorial Day weekend, despite at least 17 showing an upward trend in daily coronavirus cases. President Trump, during a White House cabinet meeting, says having a lot of cases, in a certain respect, is a good thing because it means our testing is much better.
So if we were testing 1 million people instead of 14 million people, we would have far fewer cases, right? So I view it as a badge of honor. Really, it's a badge of honor. It's a great tribute to the testing and all of the work that a lot of professionals have done.
So far, about 91,000 people in the U.S. have died from the virus. The presumptive Democratic presidential nominee Joe Biden came out swinging during a Yahoo News town conference. He blasted President Trump for trying to divert attention from the coronavirus pandemic with Obamagate, scoffing at Trump's suggestion that it is the greatest crime, and for Trump's unwillingness to hang portraits of the Obamas in the White House.
This is so venal, so petty. The greatest crime? I mean, my Lord. This is...
A federal judge has ruled Texas must give any voter afraid of catching the coronavirus at the polls a mail-in ballot for as long as the pandemic threat continues. Texas's top officials, all Republicans, are fighting expansion of mail-in ballots to voters under 65 and don't qualify as disabled under the state's definition. They claim mail ballots are prone to voter fraud and insist election officials will implement sufficient social distancing policies to make it safe to vote in person this year. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John.
Michael Barr, thank you, sir. Thank you very much. Michael Barr with your headlines, your news worldwide. Here's your price action this Wednesday morning. Yesterday, equities lower. This morning, the S&P 500 positive by 30 points, up a little more than 1%. Just for a moment of time, Tom, we were talking about that cyclical shift, that cyclical rotation, that cyclical rally. Yeah. Then yesterday, again, just turn it upside down. We haven't seen it sustained. It just hasn't proven to be durable just yet.
It's a range, I guess, and we're buttressed up against 2,900, 3,000 on SPX. That's fine. And, you know, I understand there's the ideas of short covering and this and that. And, John, I just think it's looking for further information. Can I note a print of Brent crude, $35 a barrel?
What a turnaround, eh? In a single month. Absolutely unbelievable. Looking forward to having that conversation a little bit later this morning. Good morning to all worldwide from a beautiful New York City. Gorgeous. Weather's fantastic. This is Bloomberg Radio.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Influential conversations from
Switch on Acorn TV, the brand new streaming service featuring world-class TV from Britain and beyond. Watch exclusive premieres like the colourful crime drama Queens of Mystery.
Once you have eliminated the impossible, whatever remains, however improbable, must be the truth.
And fan favourites like Inspector George Gently.
I'm just an old copper doing his job.
If you love drama with a little mystery thrown in, enjoy 30 days free with code ACORN30. Then just $4.99 a month. No adverts, no contract, cancel anytime. Join online today at acorn.tv.
If you want to do something important, work in adult social care.
I'm Greg and I lead the team at a residential care home. Supporting people to live life to the fullest, it's an amazing job to have.
We are recruiting in your local area. We need you now, and they need you always. Care for others. Make a difference. Today. Search adult social care jobs now.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
Hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. Shares of Target are little changed. There is some concern over its weakening profitability as more of its sales are coming from lower margin food and household essentials rather than the cheap, chic apparel and home decor it's famous for. Meanwhile, first quarter profit beat analyst estimates on record sales. Lowe's, meanwhile, up 5.5%. The home improvement retailer reporting first quarter profit that beat analyst estimates. And Halliburton, up 1.4%, is reducing its dividend by 75%. Futures this morning are higher. S&P futures up 30 points. Dow futures up 261. NASDAQ futures up 93. The DAX in Germany's up about 0.2%. 10-year Treasury down 1/32, yield 0.69%. The yield on the 2-year 0.16%. NYMEX crude oil is up 1.3% or 41 cents at $32.37 a barrel. COMEX gold up 0.5% or $8.20 at $17.5370 an ounce. The euro 1.0957 against the dollar. The yen 107.58. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you. Thank you very much. So many different things to talk about in Washington this morning. Yeah. Let me just point out the tension between Secretary Mike Pompeo and the Chinese Communist Party right now. Secretary Pompeo referred to Taiwan's leader as president, and anyone familiar with that situation will know what that means to China. And China have come out and vowed to take necessary countermeasures in response. Tom, I have no idea what that means, but the back and forth between Secretary Pompeo and the Chinese Communist Party over the last couple of weeks has been quite something.
Well, let's go there, folks. I think there's a lot to talk about here. Let's talk about the gentleman from Kansas, an esteemed academic career at West Point. And here he is as Secretary of State. Kevin Cirilli, is there a Pompeo manifesto? I mean, to John's good question, is this guy have a unique independence, or is it a Trumpian theory, or is there no theory at all?
No, I think that he has definitely become, from a geopolitical standpoint, the perhaps most aggressive voice within the administration on foreign policy as it relates to China. And this started well before COVID-19. He had referred to Xi Jinping as the general secretary in public comments months before before COVID-19. He gave a series of speeches leading up, warning governors before COVID-19 down in Florida. About the infiltration of the Communist Party and the not just higher education, but high school level and K through 9 level. And beyond that, he gave a speech in Silicon Valley where he also took a very aggressive approach against China. So in terms of a legacy standpoint, I think, if you map out his potential future political ambitions, he is someone who has really been having, I would say, akin to Senator Marco Rubio of Florida, to Senator Hawley as well, and others in the Republican Party who have had a very aggressive stance against China.
Kevin, there are quite simple ways to wind up the Chinese Communist Party. Some are more serious than others to the Chinese Communist Party. On the one China principle, if you start to poke around at that, you know that they're going to bite back quickly. And I'm just trying to work out what this is as part of a broader strategy just in terms of policy. What's the overall goal here?
Well, I think it's to redefine the U.S.-China relationship. And, even beyond that, right? I mean, we've seen rhetoric not just from Secretary Pompeo, but from an economic standpoint, we've seen it from Peter Navarro, who has also taken a more economic, aggressive rhetorical approach. Now, Larry Kudlow said within the last 24 hours that he doesn't anticipate that the U.S.-China Phase 1 trade agreement will be impacted at all by the escalating tensions. But look to the left. I mean, look at someone like Joe Biden, who has, even he has signaled that he will be taking a more aggressive rhetorical approach against the Chinese. So I don't think that there's much daylight amongst establishment political figures in terms of how they view China as a potential geopolitical foe for decades to come. I really don't sense that much daylight when you talk to Mark Warner and others. How they obtain that goal, there's differences, but it sounds like U.S. establishment political figures are on the same page on that.
Perhaps Peter Navarro can say that Phase 1's trade deal with China is still on the table, though Leland Miller of China Beige Book told Bloomberg Radio earlier that he expects that Phase 1 deal to be toast by September. We seem to be moving toward escalation, period, full stop, just because of where we are in the political cycle and the whole idea right now that we have a bipartisan effort to try to get more transparency from China and then also to piggyback on that with some of the other grievances. Are there any particular dates or actions that are being taken that we should keep an eye out on in order to determine how much this sort of relationship is fraying and what kind of economic impact it could have?
I would look at June as mid-June as a potential bellwether to see whether or not there's going to be any bipartisan legislation as it relates to disentangling U.S. interests from China on a host of different issues. I would also keep my eye out to see if China makes good on their word to continue with agricultural purchases.
Kevin, I want to switch gears here. I'm thinking of Rick Scott of Florida. Mnuchin testifies, Powell testifies. There's a genetic austerity to Republican senators that's almost wistful. It's from another time and place. Is it still in Washington?
I think that's going to be in the long term. The same way that the conservative movement gave birth to the Tea Party from a national spending perspective after 2008. I think you're going to see a post-2020 fight for the Republican Party, either with a second term of President Trump or not, where things like deficits are very much at the foreground. And I would also argue that should Biden lose, that similar to post-2008, the populist resurgence on the left will also happen. Elizabeth Warren introducing legislation yesterday that would provide more oversight for CEOs.
Kevin, always great to get your thoughts on a programme. Kevin's already there down in Washington, D.C. Tom, I've seen little willingness from this administration at any point over the last several years to rein in the budget, and I struggle to think that that's going to change. Even if there is a second term.
Part of the charm here, John, is a president actually has been extremely consistent that he is not a deficit hawk. I'll give him immense credit for that. There have been so many presidents that have provided lip service to the theme, and it's a genuine American theme, as I'm sure they're deficit hawks in the United Kingdom, John. But this is a president who has been wonderfully consistent that his answer, almost Rockefellian there, I got it out, an homage to Nelson Rockefeller and others to spend your way forward. He's been great about that.
There are very few exceptions to the rule, but typically the deficit hawks are usually out of power. Then once they get into power, they're converted. And that is true in history time and time again, with a few exceptions, I admit. Yeah. But for the most part, that's the general rule. In the market this morning. Go on, Tom. What do you want to say?
Are you opening up a negative rate savings account in London?
I am. I'm going to take your cash and put it in it from New York. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
This is a Bloomberg. This is a message from the government. There is new guidance to help businesses and employees who cannot work from home be COVID-19 secure at work. The advice will help you conduct a risk assessment, put social distancing measures in place, improve hygiene and cleaning in the workplace, and look after the well-being of your employees. Every workplace is different. Use the guidance to make your business COVID-19 secure. Access the support you need at gov.uk/working safely. Stay alert. Control the virus. Save lives.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £63 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 21st of May to play in the June draws. PPL manage lotteries on behalf of good causes. 16+. Conditions apply. Play responsibly.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the Uswitch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
From the Bloomberg Interactive Brokers Studio in New York, Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app. BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on Bloomberg Radio, 2 hours away from the opening bell. Futures positive up 30 on the S&P 500, positive a little more than 1% in the bond market. Treasuries largely unchanged, 0.69% is your yield on a 10-year maturity. In foreign exchange, the story as follows for the dollar weaker. Once again, the euro advancing 1/3 of 1%. Story in the bond market, Tom. UK, as Lisa mentioned a little bit earlier this morning, issuing debt with negative yields. The front end of the yield curve in the gilt market now negative, and a couple of members of the MPC at the Bank of England flirting with going negative on the policy rate. No idea when, but the conversation has really started to build in the last week.
It's got that Keynesian feel when the facts change, the Bank of England changes. I guess that's how you'd put that. Joyce Chang with us now, head of research at J.P. Morgan. Joyce has wonderful mathematical abilities out of Berkeley. We're thrilled that she could join us this morning. Joyce, we had the honor of talking to John Loyes recently. It was my research paper this summer, not on a forecast, but on a model of how the U.S. 10-year yield would migrate lower and lower, and dare I say J.P. Morgan alluded to U.S. Negative interest rates as a possibility. Can the United States culturally, socially, financially handle negative interest rates? Are we prepared to be like Germany and Switzerland?
I think in the U.S., I mean, you could see negative yields happen because we're just so close to that edge. But as a matter of policy, negative deposit rates, I do not see the Fed going there at all. Now, they're going to have to stay with zero rates. The forward guidance, increasing the purchases is, I think, the route that they're going to go, and even yield curve control. But I think the Fed's going to go through a lot more of the toolkit before they think that would be the right option to take. And I think Powell's comments have made that very clear.
Joyce, there's an interesting distinction here between market-determined negative rates, as we're seeing in the United Kingdom, and frankly, as we've seen in the U.S., perhaps not at sale, but certainly in post-sale trading, and the actual policy rate. How long can this continue where the market is pricing in negative yields while the policy rate remains positive?
Everybody's going to just have to take a look at what kind of recovery lies ahead. Now, we're looking at a third quarter rebound that we think could be around 37% annualized after going down so hard in the first half. Now you're starting to see the recovery take place. So you're going to have a discussion on just the path of the recovery. We're still a long ways from talking about inflation as being a problem. There's a whole discussion on, deflationary risk. That's really heating up in Japan in particular. And so I think that, this is something that is going to take time. You could have negative yields and flirting with those negative yields there for quite some time. And we saw that happen after the global financial crisis, and it's enduring now. So I don't think that we're going to go away from this topic anytime soon.
Yeah, this is a question I've raised on this program a couple of times. In Europe, we saw that in 2011, 2012, the front end of a lot of core European sovereign debt markets was negative. Several years before negative rates actually became a reality at the policy level in 2014. Joyce, what I think is quite interesting going forward is we do face the very real prospect of the UK joining the club. We've had two policymakers in the last few days alone start to talk up negative interest rates. So let's game this out a little bit. You could have a negative policy rate at the ECB, a negative policy rate at the BOJ potentially, and at the Bank of England, all three. And then look at the Federal Reserve. I see no willingness whatsoever to go there. We all hope they don't. But let's talk about what that could mean for the Treasury market. If we have several big and important central banks in the world with negative interest rates, how that shapes the front end of the Treasury market.
Yeah, look, I think what you've seen the Treasury do is they announced for this quarter just record issuance. I mean, $3 trillion. We haven't ever seen anything like that. So that, I think, is going to be very hard to absorb, on the long end of it. But I think you're right. On the front end, everybody is looking at this global dynamic right now. And the fact that you have even emerging market central banks flirting with QE right now, and still that, yields are coming down there. So, that you're going to move into negative yields even if it's not deliberate policy, I think is just a reality that's with us right now.
Can you flip the reciprocal? Joyce Chang, can you take all this bond talk? I mean, that's all Farrell wants to do, folks, is bond talk. Because he misses the real yield. Look for the real yield.
This conversation.
The real yield under discussion to return
no idea
shortly.
When that comes back.
Joyce Chang, can you flip the reciprocal and get yourself to huge valuations for equities? I mean, I don't even know what you do with a negative rate and a flip reciprocal to get to a multiple of 30, 40 for a utility. But can you just keep the linkage with bonds and equities intact?
Well, I think you're still going to see a winner-takes-all strategy play out in equities. So the tech sector has moved away from, the rest of the market. That was in place even before the pandemics, and now you're seeing that even more exaggerated. So, on the equity market, there's going to be a focus on, earnings, dividends. We've seen dividends being suspended in 33 companies. We've seen them being cut in more companies as well. So I think on the equity market, the focus is once again going to be winner takes all. A lot of the tech sector, at the pharma sector, have sort of moved away from where the rest of the market is. And I think the debate will actually look at what's the impact that this is going to have as far as the duration. And as you said, with Europe, this went on for years, and is something that became is it exceptional? Is this like a fast fall down in the GDP numbers, and we're going to have a quick backup, and we're normalizing to something, or are we really stuck in something that's much more a malaise that could go on for a longer period of time?
Tom, I'm really glad you brought this up. I've actually been giving a lot of thought to this, and I was looking at sort of the Fed model, at the dividend yield, the earnings yield on the S&P, for example, versus treasuries. And the problem that I have, and Tom, maybe you've done more research on this than I, the problem I have is how much is that dividend yield forward-looking, and how much have stock investors already priced in some of the cuts that we're seeing? Halliburton, for example, today, reducing its dividend by 75%. How much is the bond market pricing in well more than the dividend yield currently is?
But this is brilliant, Joyce, because what this comes down to your point, Joyce Chang, and winner takes all, is the idea that we're going to have these few companies with persistent cash flows that can lead to that dividend growth belief that Lisa's talking about to get to a higher valuation. Joyce, Michael Mabusian years ago at Credit Suisse and Legg Mason was brilliant on this. Is that where we're heading, Joyce? And is it just fewer winners? I mean, is that all this is coming? It's not going to be S&P 500, John. It's going to be S&P 125.
Well, I think that's what we're seeing, is that there's just more consolidation that's going on as a result of this crisis. And, I think a lot of people still look at the equity market and say, look, this doesn't really reflect the growth expectations. It's in line with the credit spread tightening. So this still goes back to the policy support that we're seeing, the Fed facilities, the fact that you've got, high-grade bond issuance this year hitting a record $1.6 trillion. So is it about the growth, or is it about the credit spread tightening, the Fed facilities, and is this something where we're just going to see greater concentration, which happens after a lot of crisis? It's the survival of the fittest.
Joyce, fantastic to catch up with you. Joyce Chang, JP Morgan Chair of Global Research. The takeaway from JP Morgan and the research of the last couple of weeks, last couple of months, Tom, just a view that this crisis reinforces existing trends that existed pre-COVID-19.
Yeah, there's no question about that. And that interview with Jan Loeys, Joyce Chang's colleague the other day, was just remarkable in his belief that many of these trends will continue. The Bloomberg NJIT STEM report, always brought to you by New Jersey Institute of Technology and the NJ Scholar Corps program, incentivizing residents who attend college out of state to come home and finish their degree in New Jersey. Learn more at njit.edu/NJ. Come home. Here's John Tucker.
And Tom, Johnny, and Lisa. Let's see what's making news in science, technology, engineering, and math. STAT, a respected medical journalism site, suggests that Moderna's results for tests of its coronavirus vaccine said nothing. Several vaccine experts asked by STAT concluded that, based on the information made available by the Massachusetts company, there's really no way to know how impressive or not their vaccine may be. And in a stock offering, the company itself says the data from the phase 1 study of their vaccine candidate may not be predictive of the results of later stage clinical trials. Don't eat green snow. Climate change turning parts of Antarctica green, the slimy kind of green. Scientists have mapped a microscopic algae bloom across the surface of the melting snow there. In some regions, a single-cell life form is so dense it turns the snow bright green and can be seen from space. And when you eventually get back to the office, you may find technologies that some people find downright creepy. Workplaces, from banks and offices to e-commerce warehouses, factories, sports clubs, and airports, are trying out or installing fever-testing thermal cameras, mass detection systems, and tracking software. The virus has opened the doors to surveillance and monitoring technologies that many fear are here to stay. And that is your Bloomberg NJIT STEM report. Well, here at the headquarters, we actually have thermal scanners that are set up in the lobby. It's something my mom used to do with just a kiss on the forehead.
Yeah, I was going to say 3 a.m. when you came in as well, John Tucker. Thank you.
I'm not sure I ever want to walk into the office and get kissed on the forehead.
I didn't say I was going
Is that what you're planning to do? Is that how you're keeping us away from work, that you're going to stay at the entrance and kiss Tom and me on the forehead?
Oh, dear Lord. Great. John Luigi emails in and says, who's drinking coffee? It's me. It's Lavazza Coffee from Italy.
Fantastic.
It's great stuff, John.
Can we just say that if you're working in a public space, I don't recommend at any point, pre-COVID-19, post-COVID-19, to ever kiss anyone on the forehead at work. Hey, John, thank you.
I've got something you can kiss this morning.
Okay. We're still live, buddy.
Yeah.
Oh, is this on?
I think we've got some news.
Goodbye, John.
New York City. Let's get you that news, those headlines. It's Michael Barr.
So I follow that. All 50 states will be partially reopened by Memorial Day weekend, as at least 17 are showing an upward trend in coronavirus cases. San Francisco's Democratic Mayor London Breed on lifting restrictions safely.
The worst thing we can do at this time is move too quickly and then see that curve spike up tremendously, and then we not have the hospital capacity to handle it. So I think that the pace at which we're moving, would I personally like to see it move faster? Yes, but I also have a bigger responsibility, and that's the people of San Francisco, to make sure that we are cautiously moving forward so that we can protect the health of the residents of this city.
The U.S. has reported more than 91,000 coronavirus deaths. Neighborhoods with historically low voter participation are among the areas hit hardest by the coronavirus. That's according to a new analysis by the New York City Campaign Finance Board. It is a factor that threatens to compound the crisis fallout in low-income communities of color. Michigan's governor says areas in the city of Midland could see up to 9 feet of water after 2 dams failed in the central part of the state. The Edenville Dam, which holds back water for Wixom Lake, collapsed last evening. The Sanford Dam also failed. Governor Gretchen Whitmer urged people living in the area to get out and noted the difficulty of evacuating during a pandemic.
Continue to wear a face covering when you go to a shelter or go stay with a friend or relative. Please try to protect yourself if you are able.
Midland is home to Dow Chemical's main plant. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John.
Just testing the mic. 1, 2, 1, 2. Making sure they haven't pulled me off and put me on the timeout bench. I think we're still on. We're still on. John's got pulled.
John's kissing my forehead.
John might not be on for the next few days, but I'm still live. Equity futures up by a little more than 1%. We've got a rally on our hands after yesterday's sell-off. Up 31 points on the S&P 500. Will be interesting to see what the composition is at the sector level of this rally. We've really struggled to keep those cyclical areas of this market with a durable bid, Tom.
A really, really important observation. You need 3-4 days in a row to make that trend. It has not happened yet.
In your bond market, your 10-year yield 0.69% from New York. This is Bloomberg Surveillance. We're live on Bloomberg Radio.
With a Bloomberg Business of Sports report, I'm Michael Barr. The governors of New York, California, and Texas expressed support for a return soon of major pro sports from their coronavirus-related shutdowns. New York Governor Andrew Cuomo.
Come back. The state will work with you because remember, government rules right now could stop a team coming back, right? What's essential, what's not essential. So I'm saying the state will work with them to come back.
California Governor Gavin Newsom said sports could resume in early June with protocols.
Deep stipulations in terms of protecting not only the players, but more broadly their support staff.
And that is a Bloomberg Business of Sports report. I'm Michael Barr, brought to you by Marcus by Goldman Sachs. With a high-yield online savings account, you can money.
Jenny Liss, Jewish communal leader and philanthropist, talks about why she chose the Jewish Communal Fund for her family's charitable giving.
For a lot of people, it would be the convenience factor. I don't have to track anything.
If charitable giving is an important part of your life, JCF can help you organize your philanthropy with our donor-advised fund. A fund can be established with a minimum tax-deductible contribution of $5,000. Make grants to your favorite charities, and JCF handles all the administration and reporting.
At the year end, our board awards community grants from fees and endowment income to UJ's annual campaign. We also make gifts to specific organizations, the elderly, Holocaust survivors, the hungry. The fact that we come together as a community at the end of the year to build community, that's what makes us different.
Get better at giving back. To find out more about JCF's impact, visit jcfny.org and download the Giving Report. JCF, we have a gift for giving.
Global news 24 hours a day.
This is an important update from the government about coronavirus. We all need to stay alert so we can control the virus and reduce the risk of infection. To stay alert, you must remain at home as much as possible. Work from home if you can. Limit your contact with other people. If you have to go out, keep your distance from others, 2 meters apart where possible. Continue to wash your hands regularly. Do not leave home if you or anyone in your household has symptoms. Stay alert. Control the virus. Save lives.
Thanks to National Lottery players, the Emerald Centre are now providing emergency food supplies and support for people in Bedfordshire like Alan. Thank you. And £600 million of National Lottery funding is on its way to thousands more local projects in England and across the UK during these exceptional times.
Thank you.
Thank you. Thank you.
Thank you.
Thank you. The National Lottery. Your numbers make amazing happen.
Helen is dreaming of fighting a flock of 40-foot flamingos. But in reality, she's helping fight COVID-19 in her sleep. Like thousands of others, she's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments. I'll fight you. Keep fighting, Helen. Search Vodafone Dream Lab and join the Dream Team tonight.
DreamLab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
Breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. We're watching shares of Target up 0.5% now in early trading. First quarter profit beat analyst estimates on record sales. Gross margins narrowed in the quarter to 25.1%. That missed analyst estimates. Lowe's up 5.5%. The home improvement retailer reporting first quarter profit that beat analyst estimates. Halliburton up almost 3%. It's reducing its dividend by 75% as part of a cost-cutting effort. And we're watching shares of Inovio Pharmaceuticals up 25% after it gave an update on its COVID-19 vaccine, and Surface Oncology up 37% after it said it's entered into a clinical trial collaboration with Merck. Futures this morning on the rise. S&P futures up 33 points. Dow futures up 282. NASDAQ futures up 94. 10-year Treasury down 230 seconds. Yield 0.69%. Yield on the 2-year 0.16%. NYMEX crude oils up 2.2% or 69 cents at $32.66 a barrel. COMEX gold is up 0.4% or $7.30 at $17.52.90 an ounce. The euro 1.0959 against the dollar. British pound 1.2262 and the yen 107.57. That's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you very much. Let's talk about the stock of the moment. Moderna running aggressively on Monday, up 20%, and down hard on Tuesday, down a little more than 10%. And a real debate right now, Tom, as to how much we should believe, how much hope we should have about this vaccine.
huge debate, and I'm so proud of our team, folks, the way they've spoken to the best of virology and microbiology worldwide, and of course a focus on the Johns Hopkins University. Right now, out of physics at Yale and Case Western is Matthew Harrison of Morgan Stanley, who has an acuity on biotech like no one out there. Matthew, what's the biggest hot air you see right now? To John's point, and I don't mean to pick on Moderna, but what's the hot air of biotechnology right now that you dismiss the most?
Are you asking specifically related to COVID, Tom, or something just broadly?
No, to COVID. COVID's what we're focused on, Matthew. Let's stay with that. What's the thing that upsets you the most?
Well, I don't think there's something that upsets me the most. I think the thing for everybody to remember here is twofold. One, there's a lot of early data, and everybody's very focused on looking for treatments, and I think companies are doing the best job they can, but we should be careful in understanding that data is early and data is subject to change, and just being realistic about that. So I think, you've got a lot of generalists and people who don't typically look at these stocks, and so understanding what we know and what we don't know, I think is important, and I think is a skill that people are maybe getting used to because they didn't always have to look at early data sets like this.
So, Matt, help us build that skill, because I think it's absolutely critical. It's a blind spot for so many of us. It's your world. And I think at the moment, subconsciously, people are biased because they really want these potential vaccines to work. We all want to believe they'll work. I also think there's an obvious social stigma attached to journalists and analysts and people more broadly who aren't familiar with these names to ask necessary questions, to be skeptical. So can you help establish some guardrails for us as for when this news comes out again, this kind of news, how we can look at it a little bit more critically?
Yeah, I think the biggest understanding is to know what we know and what we don't know. And so I would say the core of the debate right now is that we still don't know what level of antibodies are protective for people with COVID. And so comparing results from vaccine studies or other clinical studies against surrogate endpoints, right? Because what's been reported so far is a surrogate endpoint. Usually in a large-scale study, you're going to just test people who didn't get a vaccine and people who got a vaccine and find out if less people got infected with the disease who got the vaccine. That's the true sort of marker. But right now, we're relying on surrogate endpoints. And because we're so early in the stages of the outbreak, all of the work has not been done to establish exactly what level of antibodies are protective. People have guesses. We have ideas. We know what we should focus on in terms of that. But I don't think scientifically that debate has been settled. And so, therefore, in trying to understand how to interpret results, that scientific debate, I think, spills out into the media.
I love this line in a Drew Armstrong story of Bloomberg News. By the standards of medical studies, such early partial data are considered the territory of specialists and day traders. I want to talk about the share sale that Moderna completed late Monday. $1.3 billion of stock sold arguably perhaps at the highs, at least of the recent moment. And I'm wondering, can you give us a pathway from a vaccine, Matthew, to profits and how investors can really value a first mover kind of advantage here?
Sure. We've tried to think about what the market may look like, and I describe the market in two ways, right? In our view, there's going to be the pandemic market, which probably lasts through 2022, and then the endemic market. And what I mean, the difference there is once you get through the pandemic period and you have to vaccinate everybody or try to vaccinate everybody, there's likely to be portions of the population that haven't been vaccinated. The disease might mutate. Children who are born need to be vaccinated. And so that's going to be smaller, but that might be a longer tail. And so we've tried to price the vaccine, at least theoretically, around the pricing of flu vaccines, which are among the lowest of vaccines available. And so the numbers we put is that the pandemic period is likely between $10 and $30 billion, and the endemic period is somewhere between 2 and 25. The reason for that wide range, especially in the endemic period, is because we don't really know how much of the population needs to be revaccinated, either on an annual or some other basis.
Matthew, what will the big companies do? I mean, there's the idea of traditional pharmacology and then your esoteric world of biotech, and everybody gets all lathered up and they go to lunches to decide which biotech company to buy. Is that what's the future of feeding frenzy of the bigger companies, the bigger pharmacology companies buying up the biotechs?
I think that's a theme, right, that we've observed for a while. Biotech companies tend to be more entrepreneurial, tend to take more risk, tend to use newer technologies, and once they're proven, and they might be a new way to move quicker or move faster, right? Large companies tend to look at them, and I think that the biggest difference is sometimes smaller companies have resources to focus on one small area where their technology could work. But once you prove that, a big company can say, well, I can apply that for 10 or 20 ways, and they have the massive amount of ability to push that forward.
Matthew Harrison, thank you so much with Morgan Stanley today on Moderna and all of biotech. John, it's really, really interesting with Moderna. I don't know what to make of it. I mean, talk about swings over the last 3 days of emotion.
Yeah, I'm not sure what people thought of the fact that they released some of this data, Tom, and then they had a big share sale immediately after. I think there were some people unhappy with that.
Yeah,
and perhaps for good reason.
Well, I think that maybe people are upset with it because they bought at the high and now are seeing the shares fall.
It's typically what people get upset about, isn't it?
Why are you guys talking about me in that way?
Well, I was thinking of you when I said it.
Great.
Go on. What are you going to say?
I await Drew Armstrong's article on this. I think it will be.
So do I, Tom. So do I. Equity futures up 32 on the S&P 500. We advance a little more than 1%. I'm sure that's exactly what it is. From New York this morning. Good morning. This is Bloomberg.
Hey, y'all. Jeff Fox.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
This is an important update from the government about coronavirus symptoms and testing. If you have any one of the following symptoms, a high temperature, a new continuous cough, loss of taste or smell, you can now get tested. Do not leave home for any reason other than to get tested. Find out how to get a test and how long to isolate at nhs.uk/coronavirus. Stay alert. Control the virus. Save lives.
Whoa, just got a Moonpig reminder that it's your birthday Saturday.
Yeah, I set that up.
Oh, do you know what? I forget one time. Okay, I'm in the app.
Oh, the romantic card section.
I'm full of surprises. Now, what rhymes with babe?
How about just uploading a nice pic? No, wait, I'm not ready.
Hey, I love you from every angle. Now for the gifts. Oh, and flowers.
Heartfelt can happen anywhere with moonpig.com. Download the app now.
Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind. Giving up, I wouldn't call it a cush job because you were traveling across the country.
Get your college hoops fix with college basketball talk on NBC Sports.
Headed by Shabazz Napier, that also included Amita Brima, who is in and around the NBA ranks right now, and DeAndre Daniels, who was the 37th pick in the 2014 NBA draft. So my question to you is...
Or listen to the daily news from around the wide world of college football with College Football Live.
I would go with Utah. I think Utah is the better team. And I know I'm talking to an Oklahoma guy, but listen, and it may be recency bias having watched Utah last week and doing that game, but I just think they're a more complete football.
Discover these and more college sports podcasts right here on TuneIn.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL Show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more.
Users in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
Certainly, we've got to put a floor under the economic carnage.
Markets didn't believe the coronavirus would take down the world economy.
Finance.
The sellers are not necessarily finished, but quite exhausted.
Investment.
That's the reality that we have to settle ourselves to. This is the start of a depression.
We're going to have a bounce back when everything is open. The question is, what is the shape of the economy from there?
Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz on Bloomberg Radio.
Good morning, everyone. John Farrell, Lisa Abramowitz, and Tom Keene. Welcome to the show. Another good hour here of Bloomberg Surveillance. And with this coast to coast, we will look at the leap out of this pandemic. There is no question the statistics are better. There's some trouble stuff. Brazil is still a mess. A lot of new focus on Africa, of all things. People very cute about looking at the movement from Cairo down and from Cape Town up of what the pandemic will do in Africa. But within all of economics, finance, and investment, it's the clear and present data, and it shows disinflation. If there's any one theme over everything we're talking about, folks, it's a dearth of inflation. John, you see it in the United Kingdom with these historic negative rates.
You do, Tom, and that's why people are thinking about taking a policy rate negative as well. And I think that's the worry that I have here in the United States. Most people listening to this program right now do not want negative rates. I'm familiar with the argument. The problem that I have is, from an academic perspective, there will be an academic somewhere that sees negative inflation or disinflation and starts to look at zero interest rates and convinces themselves that having a policy rate at zero and inflation potentially going below that makes your policy rate too tight. And therefore they start to make the adventure, the journey towards negative interest rates.
It's going to be interesting, folks. David Rosenberg's scheduled to be with us tomorrow. Lisa, I look at the negative interest rates and you wonder if we're going to see it in our pocketbooks, in that it's always been goods that have been disinflationary, but now we're really seeing tangible service sector disinflation. Adrian Parr at Goldman in London today really emphasizing that with the British data, Lisa.
I'm struggling to understand the end game here. We have not seen the end game in Europe, certainly not with the ECB and what's going on there. We certainly haven't seen it in Japan. And then I'm wondering about the perverse consequences. I'll just throw this out. Herbalife. Do you remember Herbalife? A lot of people saying that it was a pyramid scheme.
Times.
Right?
Great times.
They are selling $600 million of junk bonds to finance share buybacks.
Well, that's what you do, isn't it?
I'm just dropping that there as a Federal Reserve.
Can we never talk about Herbalife again on this show?
I think it's.
Do you remember that? That drove me crazy for years.
Hold on a second. But honestly, this to me is emblematic of the time. We saw this massive swing in sentiment, and all of a sudden the market is open, Tom. And I'm just struggling to understand the perverse incentives. How many companies are going to be allowed to fail versus propped up and allowed to sort of morph into zombies?
Cue the Mark Knopfler and Dire Straits Money for Nothing, and I guess that's where we are, folks. Low nominal rates, the real yield, John, the real yield. Besides being off air, the real yield
you really are roughing
is
this
very, very low.
I've never known someone to wind up their co-anchor because they lost their show.
Well, no. Let's be clear. You did not lose the show. You can only take 4 weeks in the Hamptons this summer instead of 6 weeks because of, I get the royalty streams and all that. But the real yield will be back, folks. But this gets us to our guest, David Sowerby, where small cap and mid cap equity has to bounce off of the things Lisa's talking about, which is a crazy fixed income market. David Sowerby joins us here. David, what are the managements of mid caps and small caps going to do when money's free?
Borrow. That's a simple one, but borrow sensibly. And just to continue your conversation, I just looked at 6-month annualized M2 money supply growth is growing 35%. At the end of 2018, it was growing at about 4%. This Fed experiment is nothing short of epic. And if you translate that into what it ultimately means for nominal GDP, when nominal GDP is growing better than 4%, that's usually a good formula for the small and mid-cap space. And they didn't quite rally as fast off the March 23rd lows, but since about mid-April, small cap stocks are up about 11%. Large company stocks are up about 4.5%. And I think the catch-up in small cap underperformance, they haven't won since 2016, is starting to unfold because of the significant money supply growth dovetailing into the expectations on nominal GDP.
To be clear, small caps have a long way to catch up with the large caps. Just giving you this contrast. We've got the Russell 2000 down more than 20% versus the NASDAQ, which is up nearly 3% for the year. So at what point do we declare victory, David?
Well, I think then let's go to the University of Chicago database, go back to 1926, and I'll take my small cap and trump your large cap argument, especially your NASDAQ argument. I'll go back to the end of 1999 when smart Wall Street strategists looked me in the face and said, the best days of small cap are over. It's a liar's game. And yet small caps went on a significant 10-year run. It's not data mining. It's just ebb and flow between winners and when they lag. And I think without talking my book, I do think this monetary experiment translates to nominal GDP and a catch-up period for small cap, especially when you lean to the value side.
I mean, by definition, David, you are talking your book, and that is totally fine. I just want to make sure that our audience knows that.
Right, John. Beware of portfolio managers who come on and always tell you that their strategy has its moment in the sun. I profess not to do that, but I do believe the backdrop.
I understand. Look, this is the trade that everyone wants to make, right? They're itching to make, but don't have the confidence to do so. We're going to see the month-on-month sequential improvement. At some point in the next several months, we'll be able to engineer that purely by the fact we go from shutdown to reopening. That's clear. And just in terms of the positioning story towards the big caps, away from value to growth to big tech, away from the cyclical names, it's clear that this is like a coiled spring. The problem that people have right now, David, is the difference between a durable trade and just a tactical squeeze, and what they're getting exposure to and for how long. Can you help us explore that just a little bit further?
Sure. It's anytime a trade is uncomfortable, and this trade is still in the uncomfortable category, it sets the stage for outsized returns that I know I've always done my best. I've done my best when I've run against the herd, when I've made those uncomfortable trades. And if you look at the valuation differentials between the most expensive 20% of the market with the average stock, both in large cap and small cap, they are at some of the most extremes in 50 years. Now, countervailing that argument is we're in a slow growth environment. People are paying up for steady growth, higher free cash flow margin businesses, and eventually the truth will be, as it always is, somewhere in between. But I'll lean to those valuation extremes that exist in large cap and small cap too. This has the potential to be a multi-year run.
David Sowerby with us with Ancora. Let me do a data check quickly. S&P futures up 32. Dow futures up 276. JP Morgan open for trading. Our Herbalife 43 and a quarter up $1 and 3/8.
Here we go.
And with us, David Sowerby of Ancora. David, I want you to tell us the next Herbalife. Scarlett from Westchester emails in and says, ask him about Lundquist. You're long the New York Rangers?
And we joked about this long Brad Park, Jean Rattel, Eddie Jockman, Madison Square Garden Sports, which has spun out the entertainment division. They've sold off the Forum in Los Angeles. They're generating a fair amount of cash, selling at a very good valuation. They're building that stadium in Las Vegas, the Sphere Stadium. A lot of good things happening in Madison Square Garden, where I'm not the only small cap manager who leans value, who believes in Madison Square Garden, all the way back to when they spun out of Cablevision.
So to seamlessly shift from Rangers to small caps, I'm just wondering, just lastly, David, just real quick here.
Rangers are a small cap.
I guess so, especially right now, considering that sports are off air.
Is that the basketball team?
Seriously? And like all of a sudden crickets. All right. I just am curious about leverage. And we've seen this sort of consistent shying away from over leveraged companies, which has been an argument against small caps. How do you argue against this, a sort of zombification that we're hearing more and more about, David?
Sure. It's always about what you owned even before February 19th, which is simply, you pay heed to leverage. You pay heed to companies that are good allocators of capital that use leverage at the appropriate time when it's in their best interest. So the message across the board, large cap, small cap managers, is make sure you have enough free cash flow to cover the dividend payment, that you've got more sensible levels of debt to equity. And I think that's just as important in the small cap space. But at the same time, you've seen a number of consumer discretionary stocks rebound quite well off those lows. A name that we've talked about before, and I have, is Wolverine Worldwide. They make hush puppy shoes. They're topsiders, Keds, Merrill Box. They've been cutting costs. They use leverage sensibly. I think the companies that have been unnecessary users of too much leverage, they're paying their price right now.
David, got to leave it there. Fantastic to catch up with you. Especially great to get your thoughts on not talking your book and all of that. David Souby, Ancora, Managing Director, Portfolio Manager as well. He does a great job. I love catching up with him. Can MSG cut the seat prices when we reopen? Seriously?
Hey, John,
can we get real about the cost of sport in America?
No, in New York.
Drives me insane.
I literally, folks, have gone, I can see them out my window to see the New Jersey Devils a stone's throw away because the seats are half what they are at Madison
It's
Square
crazy. How on earth does a family take their kids to go and watch the Knicks or the Rangers when it literally costs hundreds of dollars?
No, it's true. Scarlet Fu is cruel. She won't take her kids to see the Rangers. It's just,
I don't blame her. The money's just insane. Let's get some news, some headlines worldwide. Let's do that with Michael Barr.
John, Lisa, Tom, President Trump attacked the validity of a study of veterans that raised alarms about the malaria drug he actively promotes as a treatment for the coronavirus. The president's remarks came as he defended his decision to take hydroxychloroquine himself to protect against COVID-19. The president asserted without evidence that the study of veterans was false and an enemy statement. Meanwhile, Trump's own administration warns that the drug should be administered for COVID-19 only in a hospital or research setting. It is unclear if President Trump will wear a mask when he tours a Ford plant retooled to make ventilators near Detroit today. Bloomberg's Martin DeCarroll reports.
Ford Motor Company has notified the White House everyone in its factories must wear face masks, and the United Auto Workers Union says management should enforce the rule when the president arrives. Trump was asked if he'll finally wear a mask in public.
I don't know. I haven't even thought of it. It depends. I mean, in certain areas I would, in certain areas I don't. But I will certainly look at it.
Scientists say face coverings can help prevent the spread of the coronavirus. But while he remains personally opposed to putting one on, the president continues to tout the unproven benefits of taking an anti-malarial drug as a preventive medicine for COVID-19. In Washington, Martin DeCarroll, Bloomberg Radio.
Rapidly rising water has overtaken dams and forced the evacuation of about 10,000 people in central Michigan. Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Lisa, Tom.
Michael Barr, thank you, sir. Thank you very much. Equity futures this morning, they are positive, up 34 points on the S&P 500. We advanced a little more than 1%. We are up by 1.16%. In the bond market, treasuries unchanged. Mild move higher on the 10-year yield, up by a basis point to 0.7%. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. It's Bloomberg Surveillance. Never again on Bloomberg Radio.
NJIT, New Jersey Institute of Technology, makes innovation happen. NJIT faculty mentored Christoph Camacho when he was a student. helping him co-found a startup and patent a device that uses drone technology for reforestation and to collect valuable data for land management.
I founded Paratrees back in 2016, taking what I learned from my research at NJIT and migrating it to a startup. Our technology is to really enhance land management operations, so we work very closely with land management companies. So we have a drone that performs precision reforestation, and we do storm damage assessment, having access to drones that can collect data so it's much faster. And what is more important, we help them drive management decisions. NJIT has been there every step of the way, going full force with my company.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
Influential conversations from Bloomberg Television.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £63 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 21st of May to play in the June draws. PPL manage lotteries on behalf of good causes 16+. Conditions apply. Play responsibly.
This is a message from the government. There is new guidance to help businesses and employees who cannot work from home be COVID-19 secure at work. The advice will help you conduct a risk assessment, put social distancing measures in place, improve hygiene and cleaning in the workplace, and look after the well-being of your employees. Every workplace is different. Use the guidance to make your business COVID-19 secure. Access the support you need at gov.uk/working safely. Stay alert. Control the virus. Save lives.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the USwitch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are pushing higher as investors weigh positive signals on the outlook for reopening against fresh outbreaks of the coronavirus. Treasuries and the dollar dropping. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 37 points. Dow futures up 316. NASDAQ futures up 104. DAX in Germany's up 0.6%. 10-year Treasury down 5/30 seconds. Yield 0.70%. The yield on the 2-year 0.16%. NYMEX crude oil is up 2.25% or 73 cents at $32.69 a barrel. COMEX gold is up 0.5% or $8.40 at $17.54 an ounce. The euro 1.0959 against the dollar. The yen 107.63. And we continue to watch Target up 1.2% this morning. First quarter profit beating analyst estimates on record sales. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you. Thank you very much. Focusing on the bond market now. The 20-year is making a comeback. A 20-year bond issue. $20 billion worth from the Treasury. 1 p.m. Eastern, Tom. That's when we get that supply.
It's a big deal, as Lisa mentioned, back to 1986. Ira Jersey joins us now. One of the joys of his good work on research in bonds is his understanding of the history that we have. Why are we afraid of long-duration bonds, Ira? Why is America unique in that we're not out 20 years or 50 years like so many other nations are?
Yeah, so actually, Treasury Secretary Mnuchin even mentioned it yesterday. I think the thing is, the Treasury Department itself has an institutional mantra that they want to be regular and predictable in their issuance. And the problem with a 50-year or 100-year bond is that you probably can't be very regular and predictable because you would have to be opportunistic and it wind up being an orphaned, so a very illiquid bond that would be way out there. And I don't think that the Treasury Department wants to take the risk to say issue these things quarterly. They might go pretty well for the first 30, 40, 50 billion, but then how much demand realistically is there behind that? So when I've talked to pension funds and life insurance companies, they like the idea of a 50-year, and I say, well, how much would you buy? And they're like, 4 or 5 billion. I said, okay, would you buy 15 billion? Because that's what we're talking about over time, and that's when there's a question about that kind of long-term demand being very regular.
Ira, how do you think this is going to trade? I obviously wasn't on Wall Street or in the City of London in 1986. I was around, but I was very young, and I've read the stories. I'm familiar with how the 20-year traded back then, and it wasn't how it was meant to trade. Why will it trade differently this time around?
Yeah, I think it will. I think it will trade fine. I think that there's been a long enough glide path and lead into to this that everyone's going to be set up for this bond to come. And in fact, if you look at where what's known as the when issued securities trading, so this is basically the market anticipating where this is going to trade at 1 o'clock today. That's trading right in between our the Bloomberg spline model, so basically a theoretical curve, and then where the existing bonds are trading. So it's kind of right where you would expect it to trade, about 1.2%. So it's not very exciting. I think the risk here at 1 o'clock is that people say, do I really want to buy this thing at 1.2% and hold it for 20 years? But then you go back to just last week and you look at what happened with the 30-year bond when that was auctioned, and that was at very similar yields, quite frankly, and 10 years longer in maturity. So I suspect that demand will be okay, not great, just because it's a new product. People are going to question about how liquid it is, so how easy it is to sell in size. But I think over time, as we get the reopenings in June and July, you'll wind up seeing more liquidity, and it'll trade very similarly to how the 30-year bond trades.
Ira, please just offer a little bit of a broader explanation of why it matters whether there is post-sale liquidity around these bonds. I mean, this comes at a time when the U.S. has been financing its deficit largely with T-bills, short-term debt. When there's plenty of demand for longer-term debt, why not just lock it in? And it's all about the borrowing cost for the United States, not the post-sale market, right?
Well, but the two are linked, Lisa. So we have to remember, like the risk is that if you can't sell a bond and you're worried that you can't, you wind up with higher yields. So let's go back to March when market liquidity was very poor, when you had outflows from mutual funds that was causing those mutual funds to sell Treasury securities at a time when there was a massive amount of risk off. So if liquidity is bad, you wind up with higher yields than maybe fundamentally where fundamentally they should be. So that's the fear, that if you're an investor, you want to make sure that you're able to sell your bonds at a moment's notice, particularly Treasury securities, because those are the liquid portion of your portfolio. So if you're an investor and you have different liquidity requirements, and you have to make sure that you have kind of tier one securities that you could sell at a moment's notice, Treasuries are that security. And it's not T-bills that a lot of these mutual funds hold. It's longer-term securities, so 10-year, 20-year now, and 30-year. So that's why liquidity is so important. And one of the reasons why, maybe things might be a little soft today, but I think going forward, it'll be much more liquid.
Is your dog going to be buying?
Ira, is that your dog?
That is not
convexity.
That dog is a lot bigger than Vet Bill.
Vet Bill, come on, Vet Bill. Back down.
I don't think Vet Bill's going to compete with that dog.
No, Vet Bill's going to get destroyed. Just lastly here, Ira, I'm just curious. What are you expecting? Oh, dear Lord. Tom is joining the fray.
We should let Ira go or not.
Oh, no, we should keep him on.
Are you comfortable with all this barking, Ira?
I'm good. It happens multiple times a day. Every time the Amazon guy or the Walmart guy comes, we hear that. So.
Ira, just real quick here, I'm wondering if this sale is successful, do you expect the U.S. to sell significantly more of the 20-year and 30-year durations?
I do. So basically, I think that the Treasury Department will continue to up the size of longer-term securities and take advantage of how low interest rates are, and they're doing that in lieu of doing a 50-year, as Secretary Mnuchin said. I think the other thing with the 20-year, it's actually the size was a little bit bigger than consensus. It was like right in line actually with what we thought they would do, but a lot of people thought that they would only do 15 to 16 billion. So I think it's already a little bit bigger, and I think the reopenings will wind up being 17 billion a month or so. So yeah, these will be reasonable size, and they are going to help fund the continued deficits and term out those T-bills, like you noted, Lisa. A lot of the issuance so far has been in the very short end of the curve. So as those mature, they're hoping to term those out, and the 20-year is part of that.
Ira, great to catch up with you. Go and get that delivery. Ira Jersey, Bloomberg Intelligence. Did you know, I didn't know this, but I do now, that the Fed can purchase up to 70% of the outstanding amount of a single issue, and has done so.
Of like the 20-year?
And has done so with all but two of the bonds closest in maturity to the new 20-year. So basically, and this reporting from Elizabeth Stanton here at Bloomberg, who's basically gone into all the Treasury holdings in and around a 20-year maturity, the Fed holds pretty much 70% of every single issue.
Hey, Ambrose Evans pictured in the Telegraph, John, maybe his best essay ever on this. I mean, come on, it's helicopter money.
How, Tom, nationalising the bond market?
Yes, there's no other way to put it.
That's what we're doing. Up 36 on the S&P, up 1 point.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
This is a message from the government. There is new guidance to help businesses and employees who cannot work from home be COVID-19 secure at work. The advice will help you conduct a risk assessment, put social distancing measures in place, improve hygiene and cleaning in the workplace, and look after the well-being of your employees. Every workplace is different. Use the guidance to make your business COVID-19 secure. Access the support you need at gov.uk/working safely. Stay alert. Control the virus. Save lives.
Thanks to National Lottery players, the Emerald Centre are now providing emergency food supplies and support for people in Bedfordshire like Alan. Thank you. And £600 million of National Lottery funding is on its way to thousands more local projects in England and across the UK during these exceptional times.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you. The National Lottery. Your numbers make amazing happen.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in the front office, and when I was 14 years old, my family moved back from Sudan to America. I went up high school here in New York
Find these and more NBA podcasts right here on TuneIn.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
60 minutes out from the opening bell. This is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg Radio. We advance 36 points on the S&P 500, just short of a session highs, Tom, up by 1.24%, 24 hours away from more initial jobless claims in America. And I can't tell you it's going to get much prettier going forward from here. We are expecting another 2.4 million.
Is that survey 2.4?
That is our survey, 2.4 million for the number that comes out tomorrow morning.
Some people above that 2.6, 2.7, 2.8, down from that 3 level. And John, it's an ebb over. I mean, it's the hope here is it just ebbs away, but still 2.3 million a week. That gets you attention.
It's ugly. I don't want to get into this game, this artificial game of surveying people on Wall Street. They come up with 2.4 million, then we sit here any given morning and say it's better or worse than expected. It's just bad. It's just bad. And let's just hope that it gets better. There's no better or worse than expected when numbers look like this.
What's the anecdotal, Lisa, that you see out there right now?
The anecdotal in my mind is the line at the food bank that's 2 blocks away from me. That's the anecdotal in
describe
my mind.
Describe that line to our people nationwide and worldwide. Describe that line on the street. What's it look like?
It's heartbreaking. People come with their push carts and they wait in a socially distanced line, and it's gotten progressively longer, where it first took a half block and then it took a block and a half, and now it's stretching around, and it's heartbreaking, and it's everybody. I mean, it's so many different groups of people from all walks of life, and I'm trying to square this with statistics coming out of the Federal Reserve saying that with the additional economic payments that they're getting from unemployment benefits, as well as that $1,200 payment, that a lot of families can still afford to make their basic payments. How do you square that with the increasing lines that you're seeing at food banks, Tom?
And before we get to our esteemed guest, John, give us an update on the battle. I mean, the Chancellor of the Exchequer is getting high marks in the United Kingdom for driving forward policy, but there's a raging debate in England about how far to go, right?
I think there's a worry about the cost, Tom. A worry about the cost and how much longer they can go on for. What was really interesting, that Governor Bailey really wasn't that subtle when he was asked about all of this. He basically said that he could help the government. And help the government, by what he meant by that, is that they could carry on issuing the debt and they would do more QE. Yeah. And most people expect them to do more QE. And what I find really interesting about the QE this time around, last time around, if we saw higher yields off the back of QE coming out of 2009, that collectively was seen as a sign of success, that the program was working because it was crowding people out of safer securities and forcing them to invest the money elsewhere. This time around, we seem to be judging the efficacy of QE almost exclusively in its ability to cap yields and help governments finance themselves. And that, for me, is quite a shift in the last 10 years. It feels like a different program with a different set of objectives.
Megan Green has had a wonderful set of academics and then work in market economics, and now she has her parchment out at the Harvard Kennedy School, where she is a senior fellow. Megan, are we still in the United States where all this policy is stimulus? Or are we finally getting to the point where we're going to admit it's about 3 million jobless claims and it's income substitution, wage substitution, and indeed demand assistance?
So I think we are getting to the latter, actually. And you can see it in terms of, who Joe Biden has been bringing on to advise him, for example. So there are signs that there might be a shift further towards the left, bringing people on like Stephanie Kelton, right, who's a big MMT proponent. It's just the beginning of a kernel of a hint that actually the Democratic Party is starting to think maybe kind of Obama 2.0 isn't going to do it. We're going to need to rethink how we approach the economy because a lot of people, were outraged that, half of Americans made more now on this unemployment insurance than they did in their regular jobs and thought that meant there was a problem with the unemployment insurance. But that's not the problem. The problem is that we've been paying people so little to begin with, and now lots of them don't even have jobs. So I think there's a hint that we're looking at demand boosting.
Megan, brilliant. But if Mr. Biden swings to a policy prescription much like Europe, is the rest of America going to go with him, or is he going to hand the presidency to a conservative America that flat out doesn't agree with that prescription?
Well, that's a great question, and I think anyone would be crazy to try to handicap the election at this point. But but
you're at Harvard, so you can do that.
I am at Harvard, but I think it's honestly too difficult to tell. I do think that people are realizing with this crisis, if they weren't before, that a lot about our economy is broken, right? Our healthcare is broken, our education's broken. We protect the most vulnerable is broken. And so I do think, whether it's from the left side or maybe even the right side, we're all going to have a bigger role for the government in our lives. And that's generally a pernicious thing. We don't like that. It means higher taxes and maybe surveillance with contact tracing, all kinds of negative things. But there could be a positive implication in that maybe we start to rethink our economy and figure out how to protect those most vulnerable.
And perhaps we should be doing that. But there is this terrible habit, and I'm not saying you're doing it, Megan, because I know you're not. There's just this terrible habit at the moment of looking down your nose at people who are taking entitlement spending, if it's benefits, whatever it is, welfare, if it's employment benefits, and believing that somehow people would rather be on that than have a job. I don't know anyone that would prefer to have a handout over having a job and having that empowering moment of going to work. And for me, Megan, the story going into November is who's got the message to say that we're going to create the most jobs, they're going to be well-paid jobs, and this is how we're going to do it.
Yeah, and this time really is different in that you can easily look and say, actually, all these people out of work, it is not their fault, right? This virus is nobody's fault. And so that does mean there is opportunity for kind of social mobilization here in a way that there hasn't been in the past. So I do think there could be hope for some kind of change on that front. And if you look at history, right, the NHS and council flats in the UK came out of world wars. Social Security came out of the Great Depression. So stranger things have happened.
I will say, though, Megan, the conversation in Washington seems to be shifting, at least among Republicans, to tying the next phase of rescue financing to employment with a payroll tax cut or other types of sort of employment contingent benefits. How do you see that factoring into the next phase of recovery, if at all, given that the previous rounds were really focused on the unemployed, the people who are furloughed or lost their jobs as a result of the pandemic?
Yeah, I think you point out a weakness in the approach going forward. And there's also an inherent reticence among Republicans, it seems, to actually spend much more money. We saw this in 2008, 2009 as well, where you got a few rounds of funding passed and everyone figured we would just do the rest and perfect this in future rounds, and then quickly discovered the political capital wasn't really there to pass more rounds. And I think we'll have more rounds of fiscal stimulus here, but I think that the conversation is increasingly shifting towards the skeptical side on spending more money on this, and the way it's being directed, as you point out, is towards tax tweaks that aren't really going to help people who don't have jobs or pensioners for example. That's worrisome. I think no one should be actually worried about how to pay for this war right now. That's a totally inappropriate question to be asking at this point. Deficit financing is the answer for the U.S.
Megan Green, what's the green Gini coefficient look like for America? I mean, it's a complex math and it's a complex geometry, but it's real simple. Inequalities are going to widen. James Dimon is talking about it, and others. Is it just simple? You would believe out of this pandemic, inequality widens?
Yep, I think unfortunately inequality gets worse. The people who lost their jobs were the hourly service workers who never got wage gains in the past recoveries, so they hadn't even gotten back on their feet since the last crisis, and now they've been knocked down again. Market concentration should increase significantly, which undermines workers' ability to negotiate their wages as big companies with access to capital markets take over for the small independent shops that are getting wiped out by this. So unfortunately, I think there will be greater inequality. We'll have higher taxes off the back of this, so maybe there will be some distribution to offset a bit of that. But generally, I think the U.S. has had a problem with income inequality going into this. The Gini coefficient is just under 0.5% in the U.S., which is pretty high. It's been rising since 1980, and it's just going to go higher.
Is the Fed exacerbating that? I mean, the focus really very much on the Federal Reserve and its actions, especially given the disagreements in Congress. But a lot of the Fed stimulus has really gone toward corporations, and I'm wondering how much that's factoring in here to the wealth gap.
So, yeah, every action by the Fed has distributive effects, and it may be exacerbating that, although the Fed is also providing funding to small businesses, and so that feeds through into those who are more vulnerable. That being said, the Fed has to step in, so I actually think we can't blame the Fed on this one. Maybe further down the line we'll need to figure out how to tweak this, but the Fed right now had to step in to get rid of market dislocations, without which we would have had an even bigger crisis that would have hit the most vulnerable even harder.
Megan, you know better than that. We will find a way of blaming the Federal Reserve.
100%.
I know you've been at Harvard for a little while, but that's not how this works. You know that. We find ways to blame the Fed. That's what we do on shows like this.
She had her choice of like 6 schools, and she just took the one closest to Fenway Park.
I know exactly the reasoning for all of it, but I just, been around academia just a month too long. That's what we do here. We blame the Fed for stuff.
Megan, we love you. Thank you for joining us. Megan Green of Harvard.
Should get some news, some headlines worldwide. We can do that from New York City with Michael Barr.
Thank you very much, John, Lisa, Tom. President Trump pushed back against criticism that his announced use of hydroxychloroquine against the coronavirus could spark misuse by Americans of an unproven treatment with potentially fatal side effects. The president said it seems to be very safe. Health and Human Services Secretary Alex Azar spoke at the same White House cabinet meeting.
The system we have here in the United States that is once a drug has been approved and on the market, a doctor in consultation with the patient may use it for what we call off-label purposes, which are indications that are not yet proven and not yet in the label. And this is the right to try president. He, for the first time, got the historic right to try legislation for experimental therapies, but that applies to our existing regime, which is approved products may be used in the judgment of a physician in consultation with their patient.
President Trump is threatening to withhold funding to Michigan over ballots. The president tweeted this morning, Michigan sends absentee ballots to 7.7 million people ahead of primaries and the general election. This was done illegally and without authorization by a rogue Secretary of State. I will ask to hold up funding to Michigan if they want to go down this voter fraud path. Thousands of Michigan residents have fled their homes as rising floodwaters are coming from 2 broken dams. Governor Gretchen Whitmer has declared a state of emergency as 10,000 people are evacuated during a pandemic.
Please make your best efforts to observe social distancing. I know if you're at a shelter, it's going to be very hard, but let's try to continue to protect ourselves in this moment.
Downtown Midland is expected to be under 9 feet of water. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Lisa, Tom.
Michael Barr, thank you, sir. Thank you very much. A statement from the President of the United States released on Twitter. Some wacko in China just released a statement blaming everybody other than China for the virus, which has now killed hundreds of thousands of people. Please explain to this dope that it was the incompetence of China and nothing else that did this mass worldwide killing. I think it's fair to say that relations have hit rock bottom, Tom, in a major way.
Well, I'm not willing to say rock. I think you're right about the vector. The relations are deteriorating at a shockingly rapid pace, John.
More still to come. Equity futures up 34. Who do we blame? The Fed, up by 1.2% on the S&P 500. See how this works? It's really easy, isn't it? Any given day, the Fed yields higher by 3 basis points, up by 0.72%.
Blame the real yield.
In foreign exchange, the story is as follows for you. The dollar's weaker, the euro's positive, up 1/3%. Sterling going absolutely nowhere. From New York City this morning, good morning to you all. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Brambis. You're listening to Bloomberg Surveillance Live on Bloomberg Radio.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. A lot of talk about what's in store for real estate because of the coronavirus pandemic.
I think we're in a period where real estate's going to be going through some pretty dramatic changes.
Boston Fed President Eric Rosengren.
I think commercial real estate is going to go through a major shift as a result of the pandemic.
And Rosengren tells us the work-from-home trend could result in a drop in demand in certain types of real estate.
Clearly, office space is certainly one area.
And Rosengren is also among those who think the pandemic could make those hip urban areas a little less popular.
I do think that some multifamily housing in downtown areas may be more challenged as people rethink whether they want to be downtown or in suburbs.
A Zillow survey says 3/4 of Americans working from home would continue if given the option, and larger homes with more spare bedrooms that could become offices could be appealing if people don't have to commute on a daily basis. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Connecting decision makers.
This is an important update from the government about coronavirus symptoms and testing. If you have any one of the following symptoms, a high temperature, a new continuous cough, loss of taste or smell, you can now get tested. Do not leave home for any reason other than to get tested. Find out how to get a test and how long to isolate at nhs.uk/coronavirus. Stay alert. Control the virus. Save lives.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are pushing higher as investors weigh positive signals on the outlook for reopening against fresh outbreaks of the coronavirus. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 34 points. Dow futures up 293 and NASDAQ futures up 100. The DAX in Germany is up 0.25%. 0.75%. 10-year Treasury down 9/32, yield 0.71%. Yield on the 2-year 0.17%. NYMEX crude oil is up 2.6% or 82 cents at $32.78 a barrel. COMEX gold up 60 cents. It's little changed at $17.4620 an ounce. The euro 1.0955 against the dollar. The yen is at 107.68. They continue to watch Target up 1.2% in early trading. First quarter profit beating analyst estimates on record sales. Gross margins narrowed in the quarter to 25.1%. And Lowe's is up 5.7%. The home improvement retailer reporting first quarter profit that beat analyst estimates, with comp sales jumping more than 11% in the quarter. That's a Bloomberg Business Flash.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
Good morning, everyone. Bloomberg Surveillance, Lisa Bramless and Tom Keene in New York. Joining us now from London, Marcus Ashworth with Bloomberg Opinion. And what's important here to understand, folks, is Marcus Ashworth is going to walk out of our Queen Victoria Street, turn left on Poultry, go down, turn right on King Street, and then he's going to go to Barclays Bank and pay them to take his money. I mean, I guess that's what negative interest rates mean, or something like that. He joins us right now. Marcus, help me with negative interest rates in the United Kingdom. They're like us. Can that work societally within the United Kingdom? Some form of lengthy bout of negative interest rates?
Hi, Tom. Just following your map. I remember working in the city. That was fun once. Negative rates. It's probably the worst place. The US and UK are probably the worst place in the world to have negative rates. I really sincerely hope that we don't go down this route. It's going to make absolutely no impact other than a detrimental one. I still think it won't happen. More QE's got to come first. The Bank of England is just giving itself wiggle room. If in a month's time or 2 months' time the economy still isn't recovering, is going straight down, then of course it's one possible option.
Explain the why. Why is negative rates not good in the city or in Manhattan, but it's good in Europe?
Well, firstly, it's not good in Europe. It's terrible. Look at their saving rates going straight north, their spending and retail sales going straight south, along with their GDP. I mean, you can put a bunch of ECB econometricians on it and they can come up with some excuse, but the practical reality is killed their banking industry, which is the reason why they've had to do tier depositing to try and stop everyone going bankrupt. It is something they're in desperate stakes there. Look, Sweden's reversed it. Even the Japanese haven't gone any further with it. It just doesn't work. It's desperate in the times if you need it. Perhaps try and send some signal to the banks who just simply won't listen anyway. It upturns the rules of money, and it just sends a terrible signal. Disinvestment, and it doesn't encourage people to save less and spend more. It practically does the exact opposite, because people hoard cash, they panic. The reason why they can't get a €500 note, because they're all being stored, stacked away. It's a shocking idea, but like everyone's pushing it. This is just a weight of money pushing yields down because of QE. They're crowding out the normal buyers of bonds. That's why yields at the very front end are going a little bit negative. I just hope that's all it is.
Marcus, there's a question here about the why, which is that the central bank policy is running out of ammunition here, not necessarily in how many bonds they can buy or really even whether they can go negative, but how much they can stimulate the economy, which is why people are looking toward the European Union and their €500 billion plan to provide some fiscal stimulus. How likely is it that will provide the lift that certainly is being priced in on the peripheries to some Italian bond yields?
Well, it's last gasp effort. They've got to show unity on the fiscal side. They've had an excellent response after a wobbly start from the European Central Bank. Have done a brilliant job, as have the Fed, as have the Bank of England. But they've done, they're pushing it out far and wide. Unfortunately, the take-up today on the ECB's Peltro, which is this new thing, was very low. But then again, it's not the most attractive one. The point is for Europe is they need to show that everyone's in the same boat and they can coordinate on the fiscal side. I really believe this deal is going to happen. I'll tell you why. Firstly, because the big guys are there. That includes the Commission, France, Germany, Italy, Spain, and I'm pretty sure the Netherlands are secretly behind it as well. Which means you've got a few people got to hold out, but they're the small countries. I think it will just show that at least they can get a fiscal response. The ECB has got 2020 covered, not next year.
But Marcus, I'm struggling to understand how effective this money will be, because my understanding is even if this 500 billion euro plan gets passed, and we're expected to see more details May 27th about what that entails, even if it gets passed, the money will not be delivered until next year.
Yeah, that's right. And it won't all be come in one go. It will be staggered over 3 or 4 years, and they'll borrow for 20 to 30 years. The point is it shows that Europe can stick together, that it has an ability to support the weakest and all come together as one. So, Italy will pay its 15%, but maybe it gets 30% of the overall money raised. So as long as everyone's putting a hand in the pot and helping, then they can use the other hand to take more out, but they have to have putting some in the first place. Yeah. It's the whole concept of the European Union, and that it was vital. It needs to have some support behind it.
Marcus, thank you so much. Marcus Ashworth, writing for Bloomberg Opinion. It's really important articles, folks, distilling the market moves, the investment, the financial moves that we see with all that's going on in this pandemic. Lisa, I want to go back to your Herbalife comment of this morning.
I knew it.
You knew I was going there.
I knew it.
There's IG investment grade, and then there's high yield. How many shades of high yield are there?
That's a great question. There are
a really good one of the day. Go with it.
Well, you have the top tier, the double B, and this sort of is the area.
That's high yield.
That's high yield, and that's the area that people see the Fed moving more in. The idea of trying to prevent fallen angels and catching some of them to alleviate some of the pressure on the market. And then you have the really distressed names and the expectation for a rising amount of bankruptcies that we're already seeing.
Okay, let me take a small startup company, Ford Motor. Okay, are they like a double B, high yield? That's the Fed, or are they garbage?
Well, both. I mean, they are garbage, but also they're going to be backstopped by the Federal Reserve. A lot of people thought that they were arguably the biggest beneficiary from the Fed. At the same time, again, the Fed does not want to take on basically insolvent companies and prop them up when they're eventually going to die. That is not their intention. At the same time, you had Treasury Secretary Steve Mnuchin saying they really are going to put money on the line and risk losing it. I'm struggling to understand exactly how much they're backstopped.
Do you have off the top? It's an unfair question, but off the top of your head, do you have the yield on the Herbalife piece?
Yeah, 8%. They're talking
8%.
That's what they're talking. Yeah, and it's a single B issue. Yeah,
that's not an 8% of 20 years ago. That's an 8% of 2020. Fascinating, extraordinary.
Yeah,
we are going to continue. Stay with us worldwide. This is Bloomberg Radio.
Have you wanted to speak a new language?
Whoa, just got a Moonpig reminder that it's your birthday Saturday.
Yeah, I set that up.
Oh, do you know what? I forget one time. Okay, I'm in the app.
Oh, the romantic card section.
I'm full of surprises. Now, what rhymes with babe?
How about just uploading a nice pic? No, wait, I'm not ready.
Hey, I love you from every angle. Now for the gifts. Oh, and flowers.
Heartfelt can happen anywhere with moonpig.com. Download the app now.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in a front office, and when I was 14 years old, my family moved back from Sudan to America. I went up high school here in New York
Find these
City.
and more NBA podcasts right here on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
He does! Fabry wins it!
to standout stations and podcasts. Stay in touch with TuneIn.
Want to relive the glory of college football?
Balls over a man, into the end zone.
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There's going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
10, to the 5, touchdown! Search classic game replays to listen for free.
Get your MLB fix with these great podcasts on TuneIn. Fill your 7th inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting 9 podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of like active
Round the Bases with the StatCast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks, Mike took Barry Bonds, who I think was kind of the obvious guy to take number 1, not only.
Catch these and more MLB podcasts right here on TuneIn.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business Radio.com, iHeart Radio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
There's no other way to say the world economy is in awful shape.
Whether it's a few months or 18 months, eventually it will come to an end. The economy will revive.
Finance.
Many people take the Fed to task. I think the Fed should be applauded.
We only have limited tools. It's up to the fiscal authorities to do something about it.
Investment.
In a couple of years from now, things are going to be back to probably where they were at the very beginning.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene, Bloomberg Surveillance. Thank you for being with us on a Wednesday. Tomorrow, of course, jobless claims, an extremely important number to see. Hopefully an ebbing of all the agony we've seen the last 8 weeks. We will see on that. We'll do that for you in 23 and a half hours. Right now, for those of you that like history, a negative interest rate issued in the United Kingdom. It's not so much 0.0000025%, but nevertheless, a little bit of a negative interest rate there. We'll talk a lot about that through this hour. Also on retail, David Wilson with us in a moment on retail. Bloomberg Surveillance this morning, brought to you by Cohn Resnick Advisory Assurance Tax, for ideas to stabilize your business and find opportunity amid uncertainty. Visit the Cohn Resnick Coronavirus Resource Center at cohnresnick.com/COVID-19. Cohn Resnick, COHNREZNICK, cohnresnick.com/COVID-19. Paul, your observation with all that you know, is it great to talk to Fuqua yesterday, to Kim, Professor Kim Henriette down there. That was really cool, Paul.
Yep.
With all of your experience, can America do negative interest rates? We're not Europe, right?
Yeah, we're not Europe. We're not Japan. My expectation was absolutely not, Tom. But I mean, we're down to pretty close to that. I mean, take a look at the 2-year, and we're not too far away from it. But I think the expectation is that's not a place we want to be. And when you listen to Fed Chairman Jay Powell from last week, his comments, again, he tried to steer clear of that. I don't think that's in his playbook, but we'll see where the market takes us.
Joyce Chang with a good conversation today from J.P. Morgan, where they see a continued, not pernicious, but just impulse, a glide path down to lower rates. And, of course, I know Jan Lowy's wonderful work this summer from J.P. Morgan on a model that would get us to a lower interest rate regime. Right now, we model out retail, which was certainly better than good. Rumor has it, Paul, that David Wilson's garage 4-year supply of paper towels.
He's all set to go.
He bought half of them at Lowe's and half of them at Target. David Wilson with a stock report.
Well, Tom, I would do my toilet paper buying at Costco, but that's a whole nother story. I mean, today, Lowe's is clearly front and center when it comes to earnings. The home improvement chain's up 5.5%. Wow. Earnings and sales for the fiscal first quarter were far above analyst average estimates in a Bloomberg survey, and Lowe's says its performance has been sustained this month. So we may be looking at more of the same for their second quarter. Target, or if you prefer Target, more of a mixed bag. Shares are up 1%. Now, the discount retailer also had higher first quarter profit and revenue than analysts expected. On the other hand, its gross profit margin trailed projections as sales shifted toward food and household essentials. They're just not as profitable as, say, apparel. That said, you've got Facebook shares almost at a record. They're up 3%. They're approaching a high that was set in January. They're up a day after the company introduced a service called Shops, which will let retailers set up storefronts on Facebook and Instagram. We're seeing gains for the airlines. American's up 2.5%. Chief Financial Officer Derek Kerr said the assessed value of the carrier's loyalty program, Advantage, is as high as $30 billion. And that's about 7.5 times American's market value.
Would they spin that off?
Well, this is all in the context of American going to the government for loans, because obviously you want to have the assets to back up the loans. And so that's where the assessment's coming into play.
So what are they going to do? Give the president 300,000 miles?
You know, whatever they're going to do, the shares are up, and that's what counts for the moment. And not only American, you look at Delta is up 3.5%, United is up 3.5% as well. As far as the cruise lines goes, they're higher too. Royal Caribbean's up 3.5%. You know, they disclosed $2.3 billion in cash and equivalents as of April 30th. They also added $1 billion through a note sale completed yesterday. And Royal Caribbean's higher even after reporting a wider than expected loss for the first quarter. You look at Carnival, it's up 3.5%. Norwegian also up 3.5%. McKesson's higher by, I should say it's down actually, 1.5%. The drug distributors' earnings for the current fiscal year, their forecast was lower than estimates. The shortfall reflected the effects of the coronavirus pandemic, along with investments in the business. Fiat Chrysler is also down 1.5%. The Italian newspaper Il Messaggero reported the country's government may ask the automaker to freeze a special dividend tied to a merger with Francis Peugeot. Now, Fiat Chrysler is seeking government aid in the form of state-backed loans, so that's how the payout becomes an issue. Analog Devices is up 6%. The chip maker's fiscal second quarter earnings fell less than analysts predicted. Analog Devices' third quarter profit and sales forecasts also beat estimates. Halliburton's up 3.5%. The oil services company reduced its dividend by 75% as part of an effort to conserve cash. Halliburton also says directors are taking a 20% pay cut. And one more for you. Virgin Galactic down 4%. People familiar with the matter said Credit Suisse is handling the sale of about a 10% stake in the space tourism company. And the only shareholder with that much stock is a firm controlled by Virgin founder Richard Branson, which sold a 2% stake last week.
Bloomberg Stocks editor Dave Wilson, thank you so much. We appreciate that. Lots going on in the market here, pre-market. Tom, when we think about the pandemic, and we think about the hospitals, you think about looking at your window at Mount Sinai and seeing it in the early days kind of just overwhelmed with patients. Yeah. You know, and I think, one of the issues is that most facilities found themselves, again, particularly in the hotspots, overwhelmed with COVID patients. What they weren't doing is they were not doing a lot of that elective surgery, and that's the surgery and the procedures that really are profitable for the hospital. So right now, we're at a spot, Tom, where hospitals are starting to think about, let's get back into that business. Let's open up more elective surgery as the pandemic kind of wanes a little bit in terms of the hospital stays. Alex Ruoff is a Bloomberg government healthcare reporter. He joins us here. Alex, give us a sense of where we are with the hospitals in terms of their plans to try to reopen up to some of their more core businesses, such as elective surgeries.
Well, as you guys are probably really familiar, New York and New Jersey, the real hotspots of the virus, all of their focus has been on emergency services, responding to the virus. But, across the country, most hospitals, when you talk to CEOs, they're empty. I mean, even the bulk of the hospitals, all around, even parts of New York, huge sections of them are empty. And hospitals are built to be full. I mean, this is a they have the supply on demand, this focus of getting services quickly, but they've not been doing that for months now.
Okay, Alex, I'm going to cut the medical community some major slack. I mean, they did Javits here in New York, and there's been others worldwide where they set up these big tents, and maybe they got it wrong and they weren't that busy, and there was the tent city outside Mount Sinai, right where I am. They just disassembled that, folks, in the last week. That's fine, Alex. That's the look back. Let's look forward. Why are the hospitals empty? Are we afraid to go to them?
Well, yeah, I mean, most people are currently on stay-at-home orders. There are a sense that, we're not quite sure when we're supposed to be going to these services. There's a lot of studies showing people aren't taking routine services. They're not going for cancer screenings. People who have, diabetes aren't necessarily going for routine checkups. There's been a big halt in these services. Dentists, the last time I talked to them, are doing a very small percentage. People aren't getting their teeth cleaned. This is a part of your health, and for the most part, this, the industry itself, and this is a huge section of the U.S. economy. This has long been powered the U.S. jobs market, the healthcare service.
So, Alex, what's really the economic cost to the hospitals here of kind of the pandemic and things like that? Because I know, again, as you mentioned earlier, kind of their moneymaker is a lot of these elective surgeries, and they've been, as you said, on hold for a few months now.
Well, the national groups have told us that, essentially nationwide, they're losing somewhere between $30 and $50 billion a month just staying shut down. Now, lots of states are opening back up. Texas began to allow a lot of this. Many states are rolling them out. But, it's a fraction of what they're used to. And again, this is a model that's built on getting people through, getting people services, quick, essentially in and out.
Alex, medicine is 16% of GDP, maybe it's 18%, whatever the number is, and I get the idea that the virus has turned everything upside down. How do they get the people to come back to the hospitals? Do they have to run ad campaigns?
Well, actually, that's a good question, and I think they're all trying different ways of pushing people, sort of, getting people comfortable with coming back.
Yeah.
A lot of it's going to be personal. It's going to be reaching out directly. A lot of CEOs have said personal appeals. We're going to be sending emails, having our staff call people and saying, hey,
right,
Tom, you missed your last routine checkup. Come back. We're going to reset you back up. We've set it up so you'll be safe. But I think it's going to be slow, and they're expecting this to be a slog.
Yeah, I mean, Paul, my mailbox is chock full of stuff from Mount Sinai. They want me to come in for a tummy tuck.
Exactly. Alex, just real quickly here, I mean, is this put a downward pressure on pricing? Is that a possibility?
In healthcare?
No.
Yeah, I mean, I'll come in for my cancer screening if you give me 20% off.
Yeah, that's a fat chance here in healthcare because, and a part of that's because their expenses are still high. When you reopen, you need more of these supplies. These supplies cost more money. Gloves, gowns, the PPE that was in such shortage, the cost of this stuff has skyrocketed.
Yeah.
We talked to Premier. They told me a couple of weeks ago a mask that used to cost 30 cents costs $2 now, and you need 10,000.
Yeah.
The market is going to get harder. And it's going to put so much. And the answer so far has been layoffs. They're just laying off staff. They're furloughing people. And that's how they're dealing with these cost pressures.
This is hugely informative. Alex Ruoff, thank you so much. And I really want to emphasize, folks, we're making jokes about it. But, Paul, certainly, within New York City and the huge number of hospitals and urban feel here around this nation, this is a huge deal. The de-hospitaling of the landscape is a huge, huge deal. Let's do this with time short. Let's get to the news. In New York City, here is Michael Barnes.
Tom, Paul, thank you very much. President Trump attacked the validity of a study of veterans that raised alarms about the malaria drug he actively promotes as a treatment for the coronavirus. The president's remarks came as he defended his decision to take hydroxychloroquine himself to protect against COVID-19.
There was a false study done where they gave it to very sick people, extremely sick people, people that were ready to die. It was given by obviously not friends of the administration. And the study came out. The people were ready to die. Everybody was old, had bad problems with hearts, diabetes, and everything else you can imagine. So they gave it. So immediately when it came out, they gave a lot of false information.
Almost 92,000 people in the U.S. have died from COVID-19. President Trump is threatening to withhold funding from Michigan, a crucial 2020 swing state, unless its leaders abandon plans to send absentee ballot applications to voters. Trump's threat was issued in a tweet this morning and without mention of an unfolding flooding disaster in the state that could require emergency funding or support. It comes after Michigan's Secretary of State announced that all of the state's 7.7 million registered voters will receive an application to vote by mail in August and November elections, citing the coronavirus pandemic. A federal judge has ordered Texas to allow any of the state's 16 million voters to cast a ballot by mail over fears of the coronavirus. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom Paul.
Michael Barr, thank you so much. We appreciate that. We do have green on the screen this morning. The S&P futures up 35 points. We've got the Dow Jones Industrial Futures. They're up about 309 points. That's 24,466 on the Dow. NASDAQ up about 1.1% as well. That's 103 points. 94.04 on the NASDAQ. Green across the screen right now. This is Bloomberg.
President of the Jewish Communal Fund, Zoya Raines, and her husband Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up to date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Influential conversations from...
This is a message from the government. There is new guidance to help businesses and employees who cannot work from home be COVID-19 secure at work. The advice will help you conduct a risk assessment, put social distancing measures in place, improve hygiene and cleaning in the workplace, and look after the well-being of your employees. Every workplace is different. Use the guidance to make your business COVID-19 secure. Access the support you need at gov.uk/working-safely. Stay alert. Control the virus. Save lives.
Thanks to National Lottery players, South Denbighshire Community Partnership are now delivering hot meals to elderly people in the community like Bob and Sarah.
Thank you.
And £600 million of National Lottery funding is on its way to thousands more local projects across the UK during these exceptional times.
Thank you. Thank you.
Thank you.
Thank you.
Thank you. The National Lottery. Your numbers make amazing happen.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in a front office, and when I was 14 years old, my family moved back from Sudan to America. I jumped high school here in New York
Find these and more NBA podcasts right here on TuneIn.
Hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stock index futures are pushing higher this morning as investors weigh positive signals on the outlook for reopening against fresh outbreaks of the coronavirus. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 36 points this morning. Dow futures up 308. NASDAQ futures up 102. The DAX in Germany's up 0.6%. 10-year Treasury down 5/30 seconds, yield 0.70%. And the yield on the 2-year, 0.16%. NYMEX crude oil is up 2.6% or 82 cents at $32.78 a barrel. COMEX gold up 1/3% or $5.50 at $17.51.10 an ounce. The euro 1.0975 against the dollar. The yen 107.57. That's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. One of the things we've been doing within this pandemic is trying to speak to medical professionals. We've had a particular focus on the Johns Hopkins University. Of course, Michael Bloomberg has the Bloomberg School of Public Health there, which he has generously endowed, and he is the founder of Bloomberg LP and this radio and television property as well. Away from the Bloomberg School of Public Health is their huge medical establishment. Lauren Sauer is expert at JHU in emergency medicine. And I asked her not about the deaths, but about the case dynamics right now. Here is Lauren Sauer.
We're seeing a lot of cases of middle-aged Americans who have these comorbidities, but we're also seeing younger people as well. So I think the early data that we saw that this was all affecting the elderly with these comorbid populations is not necessarily true. We have a wide age range in our population. We have a lot of essential workers who have been working this whole time. We have a very large Hispanic population that we're serving at Hopkins right now, and I think that's true in many cities across the country.
I mean, it's fascinating here to see the idea that in certain geographies we're going back, and yeah, it's the younger people going back and all that. When you see younger people trying to get back to what we knew, do you feel like they're at a greater risk because they think the only one that gets the virus is 75 and over?
I think that early messaging about it only being the elderly didn't help. I think we saw young people resistant to social distancing, resistant to some of the other public health approaches that we use. And, you know, they exactly like you're saying, were still going out. They were still interacting socially. And I think we're seeing the effects of that resistance to adopting these measures. I think that's what we're seeing right now. I also think that these people are part of the essential workforce. So we're seeing healthcare workers. Across the country, we're seeing people from these meatpacking plants, from farms, from food processing centers, and they are younger folks as well.
Lauren Sauer, talk to me a little bit about this Moderna vaccine that then we had reports yesterday that it just didn't give us enough information to know whether it was going in the right direction. Are we going to have news flows like that more regularly?
It's not uncommon for these companies to put out press releases, but usually they have data attached to them. This report showed that the people in the study, 8 people that they had conducted the full review of, had neutralizing antibodies, which is good. So they basically saw that people in 4 of the different arms that they built developed neutralizing antibodies. The challenge with it only being 8 people is partially because it takes a long time to do the neutralizing antibody research. And we didn't hear from the other, I think it was 35 or 36 trial participants as to how they did or why they didn't develop neutralizing antibodies, or even if they didn't develop them. we need more time to understand those data. And so there's no way to know what these data mean. And so I think that's what we're all waiting for. We're waiting for that resulting data set to do that analysis, to know if the response is going to be durable, to know, what the rest of that vaccine population looks like. So I think we still have a ways to go. It was a surprisingly upbeat result, but I think it is definitely a positive finding. We just have to wait and see what happens next.
What do you make of what we've heard from the World Health Organization overall? So we had the Health Assembly. I mean, who's in charge of briefing governments in this? Do you rely on the World Health Organization, or is it each country for their own?
Yeah, I think the World Health Organization is still our number one leading international body, serving all of these member states, and they are putting in place the structure by which this entire international response is happening. We did hear, it's a digital World Health Assembly. It's just a couple of days, so I think it's not going to be the same as it normally is. We did hear calls from the EU and Australia for an inquiry into the origins of the COVID-19 outbreak, which clearly seems to be directed at China, even though China wasn't specifically named. And I think that there remains some politicization around China's role in this outbreak response. So not even the origins, but how that early response occurred. And so I think we'll continue to see tensions around the assembly, but we have to continue to support the WHO in their role in global pandemic preparedness and response.
Lauren Sauer, love to talk to her. Johns Hopkins University, really quite brave in emergency medicine down there, that first line that we see at any hospital. Paul, one of the nuances today, and David Wilson alluded to this, is we're really beginning to get now, to be fair to the companies, we're farther in the calendar year, a look into Q2. We didn't have that 2 weeks ago, certainly not 4 weeks ago, but I'm getting a little bit of feeling that some sectors, not aviation folks, but some sectors can actually construct business for this terrible second quarter.
Yeah, particularly when you take a look at the retailers, they're starting to see a little green shoots of life from the consumer. We're starting to see, Tom, as we know over the last, probably a week or two, the rhetoric has really kind of built up about reopening the economy and trying to get a sense of what the balance is before reopening the economy versus public health. And from the consumer's perspective, starting to get out there a little bit more as more and more states begin to open up. We'll still see a little bit more of the consumer, perhaps with the support of some of that fiscal stimulus, getting out there and spending a little bit and trying to get back to what may be a new normal, over the next several months.
Did you see what Corbett did at Citigroup?
I did not.
He's taking, I guess, the report is all of Citigroup gets the Friday off before Memorial Day.
Oh, look at them. That's a nice 4-day weekend
just a
there.
Rumor. I mean, let's start another rumor. I mean, I don't know if Ellen from New Jersey's listening, but I think this is a brilliant idea that should port right over to Team Bloomberg Surveillance.
Team Bloomberg Surveillance. Why not? A nice 4-day weekend kickoff this summer.
It's a brilliant idea.
We have the Jersey Shore. We'll be open this weekend, subject to proper social distancing.
Oh, come on. How are they going to do that?
I don't know. I was down the shore last weekend. On the beach, people were very much apart, and it kind of worked. They're going to limit the number of people that are going to be accessing the beaches pretty significantly. So, but this will be really interesting to see if this works, across the metropolitan area.
We will see futures up 35 down, futures up 303, a plus to the market. We need to get the market open. This is Bloomberg.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset Management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential and change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a message from the government. There is new guidance to help businesses and employees who cannot work from home be COVID-19 secure at work. The advice will help you conduct a risk assessment, put social distancing measures in place, improve hygiene and cleaning in the workplace, and look after the well-being of your employees. Every workplace is different. Use the guidance to make your business COVID-19 secure. Access the support you need at gov.uk/working safely. Stay alert. Control the virus. Save lives.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
And good morning. I'm Karen Moscow along with Tom Keene and Paul Sweeney. And the S&P 500 is higher at the open, up 1.3%, up 37 points at 2959. Dow Jones Industrial Average up 1.25% or 308 points to 24,517. Nasdaq's up 1.33% or 124 points at 9311. 10-year Treasury down 6/32, yield 0.70%. The yield on the 2-year 0.16%. NYMEX crude oil is up 2.7% or 85 cents at 32.82 a barrel. COMEX gold is up 0.3% or $5.10 at $17.50.80 an ounce. The euro 1.0978 against the dollar, and the yen is at 107.5. Tom and Paul.
Thanks so much, Karen. Paul Sweeney and I wanted to find somebody who could rationalize Dow 47,000. That would be Ron Temple of Lazard, head of U.S. equities, and of course one of our most astute guests with his experience on Wall Street about trying to push away the noise. Ron, we've never seen the noise like this. We've got 20% plus unemployment rate, on and on. You know the drill. How do I keep my mind focused on Dow 24,000? I'm trying to make 7% a year, and someday out there it'll be Dow 50,000. How do I maintain that discipline?
Well, that's a really tough challenge, obviously. So I think, in the near term, I would caution about getting too caught up in the day-to-day and really start thinking, try to keep yourself thinking about the long-term investment potential of different companies. When you're making these investments, I'd say point number one is it's really important to be active right now. I think you're going to have a lot of dispersion within this market over the next, 12 to 18 months as the economic implications unfold. Some companies aren't going to make it. Some companies will make it, but by the skin of their teeth, and some companies actually are going to thrive and pick up market share. And so when you're really thinking about how you're going to achieve your investment objectives over the next, 5 to 10 years, I think it's critical to really focus on the companies with the balance sheet strength and the funding and liquidity profiles to make it through this downturn, and not only make it through, but win some extra competitive advantage market share and grow their profit potential. So I think that should be the eye on the prize, is picking those securities and avoiding the losers, which we obviously all try to do on a daily basis.
Tom, I think one of the reasons you like Ron is because he is a Duke graduate, and we all know quality coming out of there. Ron, so
every day a Duke graduate.
Absolutely. So, Tom, as you think about kind of where we are right now, a really solid rebound off of that 34% pullback when the pandemic really gripped the market back there in early and mid-March. Do you feel comfortable where the market is here, or do you feel like it's gotten a little bit ahead of itself, given some of that dire economic data that we're experiencing and likely to experience in the quarters to come?
It's interesting. When we look at the market, I mean, the market itself has rebounded a lot, like you say. The market, as of yesterday's close, was down just under 10% from the peak, but the median stock was down 17%. So I think one thing to be careful of is the index tells one story, but there are a lot of different stories underneath that index. That said, I do worry that the market is a little ahead of itself in terms of optimism and not necessarily thinking comprehensively enough about the scenarios that might unfold. For example, I mean, I'm very, it was very good to see positive news coming out regarding the potential for a vaccine on Monday. I do think that's good news, but our analysis still says at the earliest you get a vaccine for COVID-19 that's available for widespread use early next year. Now, that basically is one scenario. What that doesn't take into account is the risk that you get second or third waves of infections. So I've been watching, for example, very closely in Germany. 1 month ago today, they started reopening small businesses, say shops. I think the limit was up to 8,800 square feet. We're starting to, really carefully watch the infection numbers, the new case numbers, to see what happens when you start to reopen. So I don't think the market is necessarily pricing in the risk of a second or third wave, the risk that the vaccines might not be available as quickly as possible, and how that'll play out in different parts of the market.
Ron, there's so many obvious questions that Paul and I want to talk to you about over the next 3 hours. But Ron, I've really got to ask about how you approach these wonder stocks that just go up and up and up. And obviously it's associated with Jim Cramer's wonderful phrase, the fangs, and I get all that as well. But the 10 or so stocks out there, what do you do? I mean, if you own them, what do you do? And do you climb on board if you're not?
Well, I think the biggest challenge with some of these, part one, this kind of goes back to our first question. When I'm thinking about these companies, I'm thinking about what does their balance sheet look like? Do they have a lot of cash on the balance sheet? What strategic optionality is that going to give them over the next few years? And by the way, I'm assuming we're talking primarily tech stocks. If I think back to 12 months ago, a lot of the tech industry seemed to be in a kind of regulatory, political, reputational bullseye. If anything, they've come through this looking better and have proven in many cases that they're more mission critical than people would have thought of. So their position has improved there. In some cases, not all, they've got great balance sheets where they can actually pull off buying in even more capabilities or basically developing their own, where some of their competitors who have weak balance sheets are no longer as competitive. And then I'm thinking about, again, what's their balance sheet potential? And I think the key with any of these stocks is there's a real balancing act here of thinking far enough into the future that you don't miss the potential, but not getting so irrational that you say, well, if you think out 20 years, they're going to really be great. Well, 20 years is pretty far beyond anyone's crystal ball. So trying to kind of balance out how far you have to think in the future, recognizing it maybe on a short-term basis they get overvalued, but you know what? They might grow their earnings in the next 6 to 12 months enough to make you think, I want to buy it back at the same price, so then you shouldn't be selling it.
I mean, Paul, this is fascinating because I think so many of our listeners, including me, long-term is a 3-year vision on Amazon or Netflix or whatever.
Amazon, another all-time high today. So, Ron, one of the things that people have been talking about I find fascinating is, will this pandemic fundamentally alter consumer behavior in any ways? And if so, how do you plan for it as from an investment standpoint? Or, is it just working from home more? Are people going to spend less, save more? Are you starting to think about some of those bigger macro issues?
Yeah, we're definitely thinking about that. I do think, by the way, there's a propensity to assume during a downturn or a crisis that everything's going to change forever. Well, the reality is, I think as soon as restaurants and bars are open, a lot of people are going to be pretty eager to go back, assuming they know they're safe, right? So to me, the milestone I'm really watching for is a vaccine that we can use broadly, globally. Now, once that vaccine's available, I think a lot of things are going to go back to the way they were. Some of the things I think won't. I do think working from home will become more common. That's been discussed a lot. But that does have implications for how many miles people drive. It has implications for oil consumption, for transport use. But when I really step back, I think the thing that has not been discussed enough is what's going to happen to savings and spending behavior in general. Because coming out of this, countries, companies, and households are going to have a lot more debt. And by the way, really importantly, even a year ago or early this year, I was talking before COVID about the upcoming crisis we were going to have on the retirement side. Half the baby boomers have retired. The other half are within a decade of retirement. And in general, making a broad sweeping statement, they don't have enough savings to retire even before the
What are you going to do about that? Let's rip up the script here. It's like, Ron, Roger Ferguson is leading this debate. What is the national solution now? Isn't it just for starters to increase the amount people can put aside?
Well, I think what we found in our study of the retirement crisis is not that people need to put more aside, it's they don't have the income to put anything aside. I mean, so when we look at the percentage of households, if you think about it, defined benefit programs are largely gone. I think it's around 30% of the country still has access to a DB program. Of the people other than that, 60% of the people have a defined contribution program. 40% have nothing. So you've got a lot of people who don't have a dime put away in a retirement account. And part of the reason for that is they just don't make enough money to pay their bills today, much less put away money for retirement. So I think it's going to be multifaceted in terms of solution. One is there's going to have to be more generous Social Security benefits, which, by the way, is the opposite of what a lot of the conversation has been for the last 20 years. But maybe it just needs to be more progressive, where you're really focusing those resources on people who need it the most. 2 is allowing people to put money away. 3 is making it more accessible. What we found is around 40% of the people who work for small businesses have no access to a defined contribution program at all. The employer doesn't offer it. So let's find a way to offer it not through the employer so you always have access to a 401k. And so I think there are a number of things we can do around getting access to programs, reinforcing the stability of Social Security, and frankly, reinforcing the financial solvency of defined benefit programs that are still out there, because they're really critical to a big part of the population.
Ron Temple, we're going to get you back on to do this again. I'd love to do a joint interview with you and Roger Ferguson at TIA CREF on this, with his leadership on this issue. Folks, huge deal. I was shout out in Boston to Boston College, which I think is just, they got the best retirement center going. Ron Temple from Duke University is with Lazard. Thank you so much, Ron, for joining us today. Paul, I'm really glad that Mr. Temple brought that up, because it's something, we've been distracted with the pandemic. But this is just a huge issue. And as Ron said, the percentage of America where it's unimaginable that they could contribute their retirement program.
Yeah, it's just
not accurate.
Exactly right, Tom. And it's a big number. And as Ron was mentioning, half of the boomers are retired, the other half are within a decade. So this is something that you can't put off for much longer. I think we're going to have to really think about kind of a strategic solution to this coming up.
We'll do more with that. Ron Temple again with Lazard. Did you say Amazon all-time high?
That's what our good friend Rich mentioned.
I thought they were going to be regulated out of business or something.
Yeah, it's funny. You don't hear much about the regulation of big tech now. I think there's some other things going on.
They do the delivery like 3 times a day to the manse here. And
that's right.
It's incredible. We're up 330 Dow points. VIX in 2.35, 28 level. With our news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. Brazil has recorded its highest daily number of coronavirus deaths and cases one day after it became the country with the 3rd highest number of confirmed cases in the world. The Latin American country confirmed near 1,200 deaths and more than 17,000 new infections. President Donald Trump said that he was mulling a travel ban on Brazil. The presumptive Democratic presidential nominee Joe Biden came out swinging during a Yahoo News town hall. Biden criticized President Trump, suggesting that concerns over food supply chains are a result of a lack of leadership.
We don't have a food shortage problem. We have a leadership problem. We have plenty of food. It's being plowed under.
2 men charged in Japan with aiding the escape of Carlos Ghosn were arrested in Massachusetts this morning and are being held for possible extradition. Michael Taylor and his son Peter Taylor
His son are scheduled to appear on video in Massachusetts federal court this afternoon. Ghosn, the ex-Nissan chairman, jumped bail and fled Japan in 2019 to escape trial for alleged financial crimes. Michigan's governor says areas in the city of Midland could see up to 9 feet of water after 2 dams failed in the central part of the state yesterday evening. The Edenville Dam, which holds back water for Wixom Lake, collapsed last evening. The Sanford Dam also failed. Governor Gretchen Whitmer urged people living in the area to get out and noted the difficulty of evacuating during a pandemic.
Continue to wear a face covering when you go to a shelter or go stay with a friend or relative. Please try to protect yourself if you are able.
Midland is home to Dow Chemical's main plant. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Michael Barr, thanks so much. I want to get over here and look at I'm moving around here on the terminal, which is a beautiful thing on the iPhone. Folks, if you have a Bloomberg terminal, really try out the iPhone app. It took me a while to get used to it, Paul, but it is just absolutely
You're running the world from your phone.
I'm buying, hold, selling. I mean, when you're triple leveraged all cash, that's easy to do. Yes, I'd like more of that cash stuff. The VIX 28.14. That's a VIX that's gotten better in the last hour. A lower statistic, 2.39 VIX.
This is a Bloomberg Pursuits look at luxury. If there's one thing nobody probably predicted about the coronavirus pandemic, it's the roaring return of drive-in entertainment. From drive-through strip clubs in Portland, Oregon, to drive-in church services in Seoul, that's quite a contrast. Even concerts are now the hottest ticket in town. Industry leader Live Nation Entertainment, who has seen its billion-dollar business precipitously fall, thinks of drive-in concerts like a smaller, more intimate venue at more premium prices, minus the profit from any alcohol sales. What happens once the novelty wears off remains to be seen. But for now, even the first big social event of the Hamptons season will be a drive-in movie night, and while not the first, it's likely to be one of the more exotic. Think classic convertibles and Escalades, steps from the roar of the Atlantic and billionaires' estates. Advance tickets are $50 a car, with proceeds going to charity. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
What's the true value of your custodial relationship? Ben Harrison of BNY Mellon's Pershing explains.
As sophisticated investors demand more from their advisors, advisory firms, in turn, need to rely on their custodian to help them grow their complex businesses. At BNY Mellon's Pershing, supporting the rapid growth of RIAs is our number one priority. We understand what it means to deliver true value to our clients who are looking for a custodian that is aligned with their best interest and delivers high-value solutions, all in an open architecture environment with flexibility, choice, and transparency. Learn why so many of the largest advisory firms turn to us for the financial strength, resiliency, and high-touch service that BNY Mellon Pershing provides. When you work with Pershing, we put your business first. Can your custodian say that?
Learn more at Pershing.com or call 800-445-4467. Pershing Advisor Solutions, LLC. Member FINRA SIPC.
Global news 24 hours a day.
This is a message from the government. There is new guidance to help businesses and employees who cannot work from home be COVID-19 secure at work. The advice will help you conduct a risk assessment, put social distancing measures in place, improve hygiene and cleaning in the workplace, and look after the well-being of your employees. Every workplace is different. Use the guidance to make your business COVID-19 secure. Access the support you need at gov.uk/working-safely. Stay alert. Control the virus. Save lives.
We're all in uncharted territory looking for ways to support our communities. At Dell Technologies, we're making sure small businesses have the right tech solutions. Dell Technologies advisors are here for you, helping small businesses stay connected and productive while working remotely. with Windows 10 Pro and Microsoft Teams. We're standing by you every step of the way. Call us today on 0800 169 1745. That's 0800 169 1745.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in a front office, and when I was 14 years old, my family moved back from Sudan to America. I went to high school here in New York
Find these
City.
and more NBA podcasts right here on TuneIn.
At Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stocks are rebounding from a late session sell-off as investors keyed on signs the U.S. economy will continue to reopen and key retail earnings show signs of resiliency. Crude oil adding to its four-day rally, and we check the markets every 15 minutes throughout the trading day on Bloomberg. The Dow Jones Industrial Average is up 1.4%, up 346 points at 24,554. The S&P 500 up 1.6%, or 45 points at 2968. And the Nasdaq up 1.7%, or 153 points at 9338. 10-year Treasury down 6/32, yield 0.70%. The yield on the 2-year 0.16%. NYMEX crude oil up 3.8%, up $1.20 at 33.17 a barrel. COMEX gold is up 0.25%, or $4.10 at 17.4950 an ounce. The euro 1.0974 against the dollar. The yen is at 107.52. We are watching shares of Target. They're lower, down about 0.7%. First quarter profit did beat analyst estimates on record sales, but gross margins narrowed in the quarter to 25.1%, and that missed estimates. Lowe's is up 2.3%. The home improvement retailer reporting first quarter profit that beat analyst estimates. That's a Bloomberg Business Flash. Tom and Paul.
Karen, thank you so much. He's the most interesting man in the world. Well, okay, maybe not, but the most interesting man at Bloomberg Opinion. Jonathan Bernstein writes these short, terse articles, and whether you're to the right, the left, pro this, anti that, whatever, it's always interesting. Now, Paul, you want to talk to him about the pandemic. I get that. We'll get to that in a moment. Jonathan, I hate to say it, but I'm like a closet fan in that I watch your Twitter feed because it's so twisted. It's just amazing what you get out of the Bernstein Twitter feed. And you've made some observations on the Secretary of State. This is an original Secretary of State, isn't it?
Well, we have a fun sort of feud now between two of Secretary Pompeo's scandals going on. There's one that seems to be a private scandal, and there's one that's a public policy scandal, and it's not really clear which one is going to be the bigger scandal.
To me, it's a jumble. Now, you're looking at this 24/7, but inform our audience that, whatever their politics is, what's the operating procedure, the mode of operation, if you will, of our Secretary of State? How does he get through the day? What's the method?
I don't know if I can answer that, but, we have the Inspector General of the State Department was fired by the President at the Secretary of State's request, apparently because there were at least two scandals going on, one of which had to do with private use of public money for his own political purposes, and one of which had to do with selling arms contrary to the instructions of Congress.
Yeah. I just want to get out front of that, folks, because somehow I think we're going to hear more about this through the summer and into the fall as well. Paul, you had another theme.
Yeah, Tom, I was just, it's interesting. Jonathan has a really interesting column here about President Trump, quote unquote, gambling on reopening the economy perhaps too quickly and kind of the risk and rewards there. So, Jonathan, what do you think the policy or the strategy, if there is one, of this administration as it relates to reopening the economy here as we see a little bit of bending of the pandemic?
Well, there's sort of two pieces to it. One of them is that the administration seems to feel, or the president, I guess, and the president's campaign seems to feel there's a trade-off between managing the pandemic and boosting the economy. And, most economists and most public health experts don't really think that's the case. If people are still getting sick, if people are still afraid of getting sick, well, they're not going to go back into restaurants. They're not going to go back to ball games or whatever. So, the president is sort of cheerleading. Let's open everything up. But, there isn't this trade-off that he seems to imagine there is. But the second part of it is, if there is a trade-off, it's not really clear that he's choosing the right side for electoral purposes.
So, but I mean, presumably it's the economy, stupid. So if he's trying to rev up the economy, that's been the calling card for this president and most presidents in terms of re-election. Have a strong economy behind you. Wouldn't that argue for reopening the economy, perhaps even at the risk of maybe doing it too soon?
Well, if it's going to cost lives, the truth is we don't know. Traditionally, it is absolutely true. Political scientists have found that economic performance affects electoral performance. So, you don't want a recession in an election year. Well, if that's the case, the president's sunk. There is a recession in an election year. There's nothing he can really do about that at this point. But it's possible this time is different. We've never had a recession that was sort of a deliberate response, to an epidemic. So it's possible people will react to it differently. It's also, we have no idea whatsoever what the electoral costs of mishandling an epidemic are.
John, one more question. What are you watching? It's an open question because you got such a wide span in Washington. What's the thing you're watching right now? What's your curiosity on a Wednesday into the weekend and into late May? What's the thing you're watching in Washington the most?
What? I guess if there was one thing, I'm watching what's going to happen with the next economic package. Do Republicans really think that wait and see is the way to go? Or, Democrats right now say we need at least $3 trillion more of economic relief. And Republicans say wait and see. That's a huge gap. And that's, how that's going to play out is certainly very interesting and very important, obviously, for the economy and for the election.
Jonathan Bernstein, thank you so much. Writing for Bloomberg Opinion. Really short, terse essays, folks. Whatever your politics, I really can't say enough about how the brain gets going. Agree or disagree with Mr. Bernstein, and that is a good one as well. Paul, let's look at the data right now. And I mean, it's like, is this like the Groundhog Day? It's sort of like, it's like Monday, right? Tuesday was there, but it's a redux of Monday, right?
It is. It's I think people, Monday was driven by obviously some comments from Chairman Powell about, we have lots of tools left in our toolbox, and we had that Moderna news about a vaccine maybe in the offing perhaps by as soon as year end. Yeah. This is a little bit of a continuation of that, though. Although that sell off we saw yesterday afternoon was disconcerting, and it just kind of shows you, there's still, I think, a lot of uncertainty in this market. That's not a big leap here given what's going on in the world, but I think by and large, this market, as we've seen over the past couple of weeks, wants to move higher here based upon its sense of the timing of a vaccine, and as one of our guests pointed out, maybe discounting too much the risk of a second wave or third wave.
And some of the retail news today certainly enthusiastic as well, with Lowe's and Target. Curve steepening, that vanilla 2s10 spread, the difference in yield between the 10-year and the 2-year comes out another beep, 53. The difference in yield, 0.533%. Move the decimal over 2 places. That's 53 basis points on the 2s10 spread. 2-year yield's not giving me much. It's up a little bit over the last 3-4 days. No big deal. 0.17%. Nice move in the 10-year, 0.70, and 30-year bond is really what I'm watching. 1.43%, a breakout higher there would be something of note as well. Oil. Okay, all you need to know, folks, Lisa Abramowitz, 3 barrels of oil in her living room at a minus $20. They paid her to take it. Brent crude, $36 a barrel. Lisa buying lunch. This is Bloomberg.
Have you wanted to speak a new language, but you thought...
This is an important update from the government about coronavirus symptoms and testing. If you have any one of the following symptoms, a high temperature, a new continuous cough, loss of taste or smell, you can now get tested. Do not leave home for any reason other than to get tested. Find out how to get a test and how long to isolate at nhs.uk/coronavirus. Stay alert. Control the virus. Save lives.
Whoa, just got a Moonpig reminder that it's your birthday Saturday.
Yeah, I set that up.
Oh, do you know what? I forget one time. Okay, I'm in the app.
Oh, the romantic card section.
I'm full of surprises. Now, what rhymes with babe?
How about just uploading a nice pic? No, wait, I'm not ready.
Hey, I love you from every angle. Now for the gifts. Oh, and flowers.
Heartfelt can happen anywhere with moonpig.com. Download the app now.
The Mina Kimes Show podcast.
Kevin Clark.
If Josh Allen became the 10th best quarterback in football this year, they'd probably win 14 games. Am I wrong about that?
No. If you as a quarterback can't win in the Bills' situation right now, they should not extend you. So many teams, Jets, do not have the information they need to evaluate their quarterbacks based on the teams they built around. The Bills do.
Listen and subscribe to the Mina Kimes Show podcast.
Search the Mina Kimes Show to listen.
Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown to a pro wrestler's perspective on life and culture at large, search sports and scroll down to the world of wrestling to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind. Giving up, I wouldn't call it a cush job because you were traveling across the country.
Get your college hoops fix with college basketball talk on NBC Sports.
Headed by Shabazz Napier, that also included Amita Brima, who is in and around the NBA ranks right now, and DeAndre Daniels, who was the 37th pick in the 2014 NBA draft. So my question to you is,
or listen to the daily news from around the wide world of college football with College Football Live.
I would go with Utah. I think Utah is the better team. And I know I'm talking to an Oklahoma guy, but listen, and it may be recency bias having watched Utah last week and doing that game, but I just think they're a more complete football.
Discover these and more college sports podcasts right here on TuneIn.
At Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
The Fed action, essentially unlimited quantitative easing.
People have had the rug pulled out from under them overnight.
This could be a lower for longer hit.
The economic news seems to be getting worse and worse.
Breaking market news and insight from Bloomberg experts.
It's possible that this is going to be a scarring recession. The Fed is really showing that they're doing whatever it takes.
A lot of people don't expect that the economy will reopen in full.
This is really hitting industrial America, and it's a major crisis.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from New York City and points beyond to a worldwide audience. Coming up, we're going to take a look at the bond market with R.J. Gallo, Senior Portfolio Manager at Federated Hermes, get his views on the market. Plus, we're going to take a look at the U.S. State Department under Secretary of State Mike Pompeo as we head into some very challenging negotiations with China. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
Well, Paul, stocks have rebounded from yesterday's late session sell-off. Investors are keen on signs the American economy will continue to reopen, and key retail earnings showed signs of resilience. Crude oil has added to its four-day rally. We check the numbers every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is up 1.5%, up 45. The Dow's up 1.4%, up 338. And the Nasdaq's up 1.8%, up 167. The 10-year is down 5/30 seconds with a yield of 0.70%. West Texas Intermediate crude's up 4.4% at $33.35 a barrel. COMEX gold is up 0.4% at $752.30 an ounce. The dollar yen, 107.53. The euro's $1.982, and the British pound, $1.2269. Let me take a look at Investment Management Corp of Ontario. That's a money manager for pension funds in the Canadian province, has committed $250 million to a dislocation fund by Apollo Global Management. The Canadian pension fund is investing in Apollo's Accord Fund Series B, which will focus on bonds and loans that have fallen because of liquidity-driven selling rather than for economic reasons. That's a Bloomberg Business Flash. Bloomberg Markets is underway with Lisa and Paul.
Greg Jarrett, thank you so much. As Greg was talking about, we are seeing equity markets gaining here. I want to focus in on what's been driving the gain, and that is Amazon. And Amazon in itself and in its entirety, it shares now at a new record high. Dave Wilson, Bloomberg stocks editor, joining us now. Dave, how much is the stock rally that we're looking at a story of a few big names that are consolidating their power?
Well, they're certainly part of the mix, Lisa, and it's not just Amazon either. You know, I was taking a look at what I call the fan mag stocks, the FANGs plus Microsoft and Apple.
We popularized that.
Well,
I think we did that. But go on, carry on. Yes, you're looking at fan mag. Go on.
Amazon, you mentioned, setting a record for the second straight day. Facebook's at a record today, and those shares are up more than 5%. You know, we saw Netflix set a record earlier in the week. It's up a touch today, not all that much. You've got Microsoft and Apple within about 3% of their records. I mean, Alphabet, the owner of Google, the G in FanMag, is the only one that's lagging, really, and it's still within 10% of its high and up more than 2% today. So, you know, you're seeing strength in these shares, and there's no doubt that is a big piece of the story. But beyond that, I mean, if you go through the 11 main industry groups in the S&P 500, you see the economically sensitive areas of the market doing relatively well. Industrial companies toward the forefront of the gains, raw material producers too, financial stocks, which certainly have had their issues lately. You know, we can throw in energy shares, although that's a lot tied to the price of oil, and really